screwed this up. Hey, there it is. Looks like the microphone came back. I don't think there's anybody even watching this, though. Hey, oh, there's one person, but that might be me. Maybe Ben, you can pop on over to the YouTube page, and you can pop on over there we are. To the YouTube. That's me. Shit, looks like the microphone's working now. YouTube page, and you can pop on over to the YouTube. Yeah, blah, 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 blah. All right. Well, it looks like we're rocking and rolling. I don't know whether anybody's actually going to be watching this or not. Whoops, it says 2 viewers, so we just doubled our subscription base. Woohoo! I'll throw this in the lounge.
I think that was me.
Well, that's cool.
Yeah. Everything sounds good over there. We're rocking and rolling.
Well, that's cool. Awesome. All right, so welcome back to the Frivolity, everybody. To whoever's here. It's me and you, so I'm just speaking to you, Ben. Oh no, look, there's one more person. Hey, look at that. We're growing by leaps and bounds. Oh no, now we lost somebody. Anyway. Welcome back to the Frivolity, everyone. It is a little bit after 6 o'clock here on Wednesday. Our typical showtime for our weekly look at cryptocurrencies. TRI's Top 100 Crypto Review. TRI's Crypto Countdown. TRI, we never know what the hell the name of this show is, but what the hell, we have fun. Hey, there's Adam. Yeah, Adam, you're like clockwork over there on YouTube, so you'll be our Captain YouTube, all right? Keep those ruffians in line. It is Fed Day today, interestingly enough. We just had the U.S. Federal Reserve do their thing. And unfortunately, what I heard from the Fed, and actually I even tweeted something out along those lines, Fed comes out and says, we will keep pressing forward. And I thought it was interesting listening to the commentary. We like to put sort of a matrix of the markets and then throw a hangout together. And we just sit and chit-chat and pick apart all the different sort of nuances of what he says through his meeting. And the one thing that we kept hearing over and over and over is the public would be mistakenly under the impression that the Fed is going to lighten up anytime soon. In other words, we're raising rates. We're going to keep raising rates. Get used to it. More is coming, not less. And the irony of it all, in Stanley Druckenmiller, if you Google him, if you want to learn who he is, I'm sure everybody at TRI and anybody who knows me knows how much I respect Mr. Druckenmiller. He basically said that probably you're not going to see an end to this until these guys' interest rate is actually above the stated inflation rate. Now, I did notice that as he was sort of chit-chatting away, he kept making reference to the core rate, which is somewhere in the high 5s, low 6s. And right now we're at, I guess, 4%. So at least, we're closing in. This time last year we were at nothing. And we were looking at a very, very steep move back to quote-unquote normal interest rates. So I think actually we're getting normal. We used to always say in the stock market, if you want something guaranteed, I'll show you 3%. But what was interesting was over this past decade, sort of dealing with the aftermath of the U.S. housing crisis in 2008, which sadly was just basically a theft of a whole generation's life savings. But I guess we won't open up that can of worms today. But the long and short of it is to get through that absolute mess that the banksters created there in 2004, 5, 6, 7. They pretty much had to keep interest rates abnormally low. And then also, too, we were in a troughing period for interest rates on a long-term cyclical basis. So as a result, most of you actually got sort of accustomed to what I would actually consider, I remember I started this game back in the 80s, what I would consider sort of historically abnormal, right? Interest rates are not supposed to be as low as they were. So anyway, we're starting to finally move our way out of that world, and I suppose that's this image. Coupled with, that doesn't really mean a heck of a lot to you. That's sort of like the health of the financial system. but probably this image, there is those abnormally low interest rates. This is basically the short-term interest rate market over the past 40 years. So our abnormally low interest rate, that environment is finally starting to correct. But the interesting thing is you can see that, we haven't got that much further to go. Probably another 6 months or so, 8 months. And then we'll finally start talking about being at the end of this tightening cycle, and we can all go back to being bulls again. Oh, yay, party. So that's the backdrop of the current market state. We're not quite at the sort of sideways cyclical pivot. Short-term interest rates driven by the market are still leading the Fed higher, and since the Fed is basically playing catch-up with the market rate, what you really want to see is you want to see a W come in on the market rates. And then we can start thinking about, hey, maybe the Fed can cool it. But that in essence implies that we have to start seeing W's out of this orange line. I mean, maybe we are, maybe we're not. There is the Fed increase of late. And right now their official rate's sitting, I guess, 96. So even the market's even pricing in a little bit higher than that. And if I'm not mistaken, I think in December they're planning on raising interest rates again as well. I guess before we get going, I mean, that was sort of the topic du jour. And probably, I do like to do a little bit of backfilling. This is a weird time in the marketplace in that the Europeans have rolled their clocks back, but us North Americans haven't yet. So as a result, one of our co-hosts tonight probably won't show up for an hour or so, maybe another 45 minutes or so, because he's still fast asleep. Poor little guy. He's off in Sleepyland. From what I understand, I think he and his trading group are making bucket loads of money, so you don't need to worry. I'm sure he's sleeping on a pillow of hookers and blow. Maybe. Anyway, so we don't have Paul here tonight, so maybe I'll do a little bit of backfilling, talk a little bit about interest rates, trends, and risk assets, that kind of stuff, while we wait for Paul to arrive. But we do have Ben here tonight. Ben, are you with us, sir? Thank you.
Yes,
sir.
I sure am.
There he is. And actually, it was interesting looking at a number of assets that are bottoming between at 88.6s and wondering how your magic formula fits into those kind of equations. Like I saw, I think Litecoin's now starting to break out. So it'd be interesting to take a look at that kind of chart. And if anything, not a bad idea to sort of put into context, where we are, what typically happens in these political years, what we're expecting into the end of the year, and then, are there any names in particular that are jumping up here? Someone did ask in the lounge today how they got a copy of the spreadsheet that we do for this show. I don't think we really want to give out the spreadsheet anymore. We tried to do that in, this is the 66th episode of this show, so you can even say a year ago. And it just ended up turning into a mess. So I actually separated this spreadsheet into its specific two sheets. One, our fun little prediction game, and then secondly, the actual analysis of the coins. Ben, bless his heart, actually put together this app, and you can download it, and it theoretically has all sort of like our macro charts, as well as recent charts from assets that we looked at. I did notice earlier today, and if you were clicking on this wondering what was going on, we did have kind of a funny little disclaimer message in some of these, so Ben and I sort of talked about that. We're going to try and clean that up a little bit going forward. And if anything, probably not a bad idea, just get some input from all of you as to what you would like. We started off doing this a year or two ago with kind of like, is the market in trade location? Is the market in divergence? Does the market have market structure? I mean, it's an awful lot of work. I don't know whether that's an efficient use of our time here. Recent analysis, and it's been kind of fun because Paul's been sort of placating us doing the charts, and so some of the recent charts have just been nothing more than Paul's just quick write-up of the chart. But you know, do we want to do things like, is it like maybe from an investment grade? Maybe what we'll think about is, you know, are we in investable trade windows, reload zones, higher time frames? Yes or no? Just a simple yes or no should make it really easy. Do we have confirmed momentum divergences? Do we have price structure? I don't know. I'm kind of thinking, you know, this is basically our 3-step setup approach to the market. So anyway, we'll work on this. I would like to get this app to the point where you wouldn't really need the spreadsheet. Everything that you'd want from our shows could be downloaded from the app. So consider it a work in progress. We're going to try and sort of, try and work on making this a little bit better. I mean, I'm just tickled pink that Ben even put this together. So totally awesome. Thank you, Ben, again. I guess, like I said, we got probably about half hour, 45 minutes until Paul gets here. So I'll just sort of run through sort of bigger picture what I see happening in the market and, what I'm thinking sort of going forward. As soon as Paul does arrive, then maybe we'll go and look at how our predictions went. And if anything, if Paul is wrong, then it means he's probably making a pile of money. On the trading front, if he's right, then it means he's probably not making money from trading. So we'll get a report from Paul as to because he was a bit, he's consistently, I'm a bull. Do we have a number here for this week? I don't know whether we want to fill that in now. Maybe I don't know.
I'll go ahead and fill that in and see where we're at from last week.
All right, appreciate that. Thanks, Ben. Appreciate it. So first things first, and I'm loving how our website is being filling out with, I think, usable information. It's kind of ironic. We have a little bit of a gremlin. I'm not quite sure, but this chart seems to, and it must be something to do with the reactor or whatever. But I've asked Siort if we could just get the chart back up in the appropriate spot. But actually, this is sort of the overview page. I suppose with regard to crypto, this is a very handy little resource, our weekly commodity trend survey. I have a page that I would like to add to the sort of membership dashboard. That's the whole thing. And if anything, it's kind of cool just to scroll down here and come down to crypto. A lot of these markets, 3s, 4s, kind of meh. The extremes of this range are actually, I don't know whether we even have it on the site. We might have it somewhere. But there's a really cool image that I used to have for this that sort of shows a sine wave. Actually, I might have it in here. I don't know whether I do or not. Maybe this is all crypto stuff, so I don't think so. There's no. Oh well. Let's see. How am I going to do this? I know John. The only problem is we've got John's awesome tool, but half the time I can't remember what the damn login is. So let's see if I can remember the password and login. This is sort of like the whole market. The TRI dashboard is just a limited version, but I just want to show you the whole market. And what I really want to show you is one image in particular. Let's see, where is that gentleman? Oh boy, do I ever talk to a lot of people. There he is over there. All right, and I should be able to log in with, and survey says no dice. I don't know why the fuck I can't log in. Anyway, John, if you're watching this later on, I've tried this several times and it just doesn't work for me. Not quite sure what I'm doing. Maybe this has to be a capital G. Survey says nope. Jeez. Anyway, fudge. Anyway, I wanted to show you this one image that I used to describe this. Actually, I probably have it on this on a spreadsheet over here. So I don't know. We're waiting for Paul to turn up, so I'm just going to waste some time here. Try. What does that mean? Oh, TRI guess. You think that's what it is? TRI guessed. No. No. I don't know what it is. Oh. Both? 1, 2, 3, like that?
No, so TRI guessed, and then
I'm such a knucklehead. Anyway, I tried, John. He shouldn't be selling assets. He has to be very, very careful here. Because he's scraping data off of the web. So he can't be reselling this. And this is the whole point, is that if you do have access to this and you can log in, he has a disclaimer right off the bat. I'm not selling this, so get off my back. And frankly speaking, I think that's wise, because this is perfectly good information. Is that what it is? How many different ones it is? So a capital G? Is that what you're telling me here? All right, and then survey says, "Come on, baby, come on, you can do it." Oh, something's happening! Yay, we did it! See, so most important here, we want to protect John's ass, so he's not selling, and there's no guarantees. I'm only showing this because I actually want to show you one specific image. And that is this image. This is what I wanted to show you. So, assets that are right up at the top end of their range, but haven't actually flashed sell signals yet. Those get like, 2s, and then maybe you'll have like a 1 on a breakdown. And then 3s and 4s mean that the asset's probably close to the mean. Then conversely, a 5 means that the market is below the mean and getting ready for a break to the upside. So this is sort of the way that I look. Hey, there's Paul. So it turns out he got up at around 6:30. Anyway, hello, sir. Suppose you're sleeping in over there in Romania. You guys just change your clocks?
Yeah, what's the problem about time zones?
Nah, don't
Hello,
worry about
yeah.
it. It's all good. It's all good. Wake up, go have a cup of coffee, have a couple smokes, come back, tell us when you're all sort of awake and ready to go, and we'll jump in, okay?
Yep.
All right. So anyway, the point here is that if you get assets that are spitting out 5s and 6s, which is basically what's down here, it means that the market is substantially below the mean, and you're actually starting to get moving average crosses, which will support sort of trending higher markets. So, on TRI's website, we've got the crypto top 30, and you can see all of them. So these, and it's fascinating that the top 30, they're all 5s. Why? Because, look at any of these. And actually Doge is probably a good example of one recently. The 52-week high was 30 cents. The low was 7 cents. Where are we here? Low was 5 cents, beg your pardon. So, add that together, divide by 2. Is 35 is basically 17 cents or 17 and a half cents. So the stock, and you just pull up the Doge itself. Where should we do this? Well, I guess we can do it here. DOGE. What I'm looking for is assets that are at the bottom end of their range. And, here's 50% level. This is Doge versus Tethers. Don't think... Oh, this is a percentage. That's why. There we go. So there's 50% level, ironically enough, from the entire range. Our little study here just sort of like tries to look at this like WD GAN. So we just want to know what sort of the range of the past year is. So there's like October to October, something like that. I guess we're now into November now. So something along those lines, roughly. And what's a 50% roll, right? So this is a 52-week range, roughly. Just bear with me on this. And that paints a target there of about 20 cents. Like I said, now I think it's down to, I guess that's the latest high, so 17, 18 cents. So if we start getting turns down here, if you start seeing markets that look like this, right, that to me, this is the irony of investing, right, is that this market looking like this, to me, looks extremely attractive. Of course, you know, all the public figures and stuff like that, you know, he went on Saturday Night Live here, and all the public was all rah bull here, which was absolute stupidity. And, you know, anybody who bought into that nonsense, of course, there died 1,000 deaths. Now we come down here, and the irony of it all is, and I even put out a tweet to this effect, just, you know, anybody, and keep in mind, I mean, we had a really nice rally there. So the interesting thing is, you know, Brian loves his weekly W's. So you see down, up, down, breakout. Did not go through those lows. In fact, we even put in a nice little W down in here. So you can make the argument pretty easily that, you know, anywhere down in this area you could buy. That's like 6, 7 cents, and rallies up into 13, 14, 15 cents, banging out doubles. It's a pretty easy trade. You get yourself some free coins, and then, you know, if this thing does moon, whatever happens to those free coins, that's your gravy. And this is basically what, you know, probably 80, 90% of the public comes to TRI to try and learn how to do. Is, you know, build tools, you know, like we have a number of different trade location tools that we like to teach, but, you know, this is a really, really simple one called the reload zone. And if it's at or below 61.8 to 78.6, I actually consider this a perfectly fine investing window. If I had like little old lady customers and this asset had come down here, I'd be like, fine, you can go and buy. 88.6, I think, is actually sort of like your venture cap reload zone bottom. And I do see a lot of bottoms come in off 88.6. You know, Simon Dixon, he often tells his public audience, if you see a correction of 80%, although that looks like a terrible 80, then you're probably going to start getting into value. You know, he specifically speaks about Bitcoin. I don't think he really likes Doge. But anyway, the point being that down here, this is actually where you have to force yourself to start accumulating. So this trade here is actually pretty darn cliche. And that was basically this guy. And even now, it's still rated a 5. So remember John's little matrix here. And actually, it looks like this is slightly wrong. I have to help him correct the numbers here. But in essence, the market down in here is a 5. And then when you get that moving average crossover, that's actually when this thing should be like the most bullish, reading of a 6. And then, of course, as we move up, we get closer to 50% levels. Those numbers start to come back down. We get actually above the 50% level. You know, those numbers keep falling down into the sort of the 2s and 3s. And then you actually get a situation where the market is above the mean, and we actually get a bearish moving average cross. That spits out a 1. That's a sell signal. So 6s and 1s are sort of like your buys and your sells. 6 here, 1 here. 2s and 3s are, you know, and really 2, 3, 4. That's sort of like middle of the market. And 2s and 5s are, hey, we better start paying attention. And, you know, the whole point of me going on about this is, you notice this whole damn crypto market. Look at that. There's 2 6s. So there are a couple names that have actually spat up moving average buy signals. And if you get any kind of bullish setups on either of these, I think they're easy trades. That's the question is, do you get bullish setups? Off of things like the daily charts, 4-hour charts, that kind of stuff. But look how many markets are just waiting. They're dirt cheap. They're a million miles below their 50% rules. And they're just waiting for that moving average cross. That's a hell of, I mean, it's basically almost the whole market. The one asset, I suppose, that's probably already moved up a bit. So as a result, well, yeah. So moving averages are still pointed down here. And I guess the 52-week range, 50% level is kind of, well, I guess it's there. So, well, The 50% level should still be higher. I'm not quite sure why that XMR slipped out of the fives, because previously, of late, almost all of these things have been fives. So what do we got here? 50% level is 195. Current price is 147. Yeah, I'm not quite sure why that's a 4. That should be a 5. So anyway, so the point I'm trying to make out of all this is, and I put a tweet out to this effect, that on any given day, because this looks like this, any given day, this whole damn market, any one of them, could pop out of nowhere. And I find it interesting because we have been talking recently about the fact that Charlie has been very, very quiet. And that's in reference to Charlie Lee. And then all of a sudden, well, look who's waking up. I mean, look at that freaking chart. Oh, I couldn't believe that when I saw that today. So, I mean, the irony of it all, I mean, I suppose trendline basis, we're coming up to the trendline now. So what we'd really like to see is let's punch through this and then give us a nice market structure. But it is interesting that, when I woke up this morning, and I like to sort of watch the whole market, and I thought it was interesting that Bitcoin and Ethereum weren't really doing anything. But all of a sudden, out of nowhere, look what the hell is going on with Charlie here. And you pull up the chart, and this is exactly what I'm talking about, is there is a lot of money to be made on Charlie here. I mean, a lot of money. The 50% level alone, just of this range, is up in the 226 area, and here we are at 63. So the irony of it all is that you could probably get a couple doubles off here. So that area there, and that's probably a play against that high and that low. And we might even do things like low to high trend lines, maybe even do that pivot there, that pivot there. That looks like a pretty important line. So, I mean, the interesting thing with this is we haven't got the moving average crossover yet, but you can see how they're coming together. And lo and behold, look where we are coming up against this trend line. So this is the type of market that, number one, if you're just like, well, I'm a little old lady and I just like to buy cheap stuff and I'm not really in a big hurry. Well, it's fine. There's nothing wrong with that. In fact, I could show you the fun little tweet at the top of my Twitter page that talks a little about that. You can make lots and lots of money just playing the market from that perspective. Am I at or below reload zones? Most definitely. So I don't have a problem if you want to come in, nanny, nibbles, all that kind of fun talk. Little old lady risk management. But I would actually argue that this is turning into a very interesting situation where if we can get any kind of strength through here, and it forces, of course, 13 EMA. It's an EMA, which means that it hugs price very closely. And where's my color? There it is. I have that in red. And if it can cross the teal, right, the slow moving average, that will give us a trending signal. And then, like I said, and interesting how that's all sort of happening all right around this trend line. We got any kind of bullish structure. Remember I said, kind of like right now, Matic. Matic is a good example of this, where we just had the bullish structural cross. So there is that weekly cross. I'm in it on the bot setup that set up off of that low, that low, that low, that low. So I'm already in the trade. But because this has now crossed bullishly, hell, any kind of bullish setup here on the daily charts, I think is a no-brainer. It hasn't really come in yet. We got a little bit of a double top and, a little bit of a fractal top up there. Maybe, and somebody I even was chatting with online, I kind of said, well, maybe reload zones, candle body lows, that kind of stuff. Maybe work some stink bids down below. But I'll tell you, any kind of bullishness here now, this thing could just take off. So it's got the green light. Usually what happens after these, especially on this weekly basis, when you get these moving average crosses, usually there's a bit of a check. So the market will punch up to cause the moving averages to cross. Then there'll be a check, and then away we go. So it's a very interesting developments here in the market. And it's kind of ironic, that this is all happening when, if you go on social media, most of the people in social media are screaming about sort of, everything going to zero and the whole market falling apart. When I think, ironically enough, we have a big political event coming up here. And ironically enough, what actually describes this market the best in my eyes is, ironically enough, not crypto. But I think crypto is a good leading indicator. But I think it's actually the Dow, where we'll come back and talk about this Bitcoin setup. But this Dow, it was the one that broke higher first. And this is sort of our roadmap following this peak, something along those lines. And we had the Fed announcement today, and the Fed basically came out and said, expect higher interest rates. We're not done raising by a long shot. I think the next big hurdle has to be the U.S. election, which is coming up basically less than a week now, next Tuesday. So it'd be interesting. Next time we have one of these shows with Paul and Ben, we will know what this next Congress looks like and whether the socialists have been run out of town on a rail. My hunch is yes, and the reason why I think so is I think that we have to actually expect the market to rally here, which is so ironic because, like I said, in the depths of this, if you went on social media, everybody and their brother was calling for bear, and more importantly, like calling for the end of the fucking world. It's all going to zero! And yet, here we are in November. There's the big rally off of the bottom. And like I said, it seems to me, especially after these sort of Jupiter-Saturn cross sort of events. We were actually looking at Amazon. I think Amazon is a classic tell of what the 1% did to the public through that whole bull market. And then the way that they finished the bull and they basically froze the public out. And then after the stock breaks, then they go and split the stock so the public can participate. But I think the Dow here is your best sort of leading indicator through the this sort of recessionary market. I think you're probably going to see underperformance out of tech. It is interesting how the Dow actually bottomed here. But if we go and look at actually like technology, you see that actually the NASDAQ is still fighting desperately to try and put some sort of head and shoulders bottom in. And I don't think they're winning. But you can see we're right up against a huge battle line right here. So does the market puke out on the other side of this? M out, and if that's the case, tech's going to take another leg lower. And if that's the case, then crypto's probably going to take another leg lower. But it is interesting when you look at crypto in particular, and you look at something like Bitcoin in particular, it's got a bit of a bottom working here. I mean, I'm not going to say it isn't. And, if you are a risk taker, half of the time your job as a risk taker is just to simply step in and at appropriate levels. You've heard, Paul say it repeatedly here. You just got to step in and take the damn trade if the trade setup comes in. So I don't know whether I was a little bit hasty on jumping out of this level. I think this is the actual double bottom if there was one. And notice they left a bit of a gap there. But I have this long on, and I'm going to risk against the break of these lows here. It's a little mini contract, so it's not a hell of a lot of money. So I'm not, certainly not betting the farm. In fact, actually, I have a bunch of proxies on. Like I said, I've got the Matic setup working, and now if he gives a green light, holy moly, that guy can go. I got the sushi on. I did buy a few of these crypto stocks. I haven't gotten filled on Hut yet. But you can see, like, something like this block, I might actually get stopped out on this very quickly. And that's probably a really good anecdote of that NASDAQ trouble. If we break through these lows, then I think I just got to, lick my wounds and hop off on the sidelines. That was a pretty powerful bullish engulfing bar there. Also another one here. So I am a little surprised that this has broken as cleanly and as quickly as it has. But hey, live by the sword, die by the sword. If we do break these levels here, I'll probably walk away from this trade. Novogratz hasn't broken yet. He has a bit of a gap down below. And Marathon is now coming into these lows. So I think they're still okay. Of course, I'll keep a close eye on them. And ironically enough, I haven't even gotten a fill on Hut yet to even get stopped out. So I'm not quite sure what's happening. But it is interesting to see that this block is actually getting very, very weak in here. And I think that's a commentary on the broader tech market. And it's interesting, we had a stock pickers club last night, and ironically enough, in the stock pickers club, we're looking at things like pharmaceutical stocks. Boring. How about this one? Talk about boring. This is a farm stock in the agricultural business. These are the kind of names that got our club's stock pickers club's attention recently. Not very crypto. So just be forewarned, everybody. I don't know whether... I mean, it is kind of cool to see Litecoin here trying to buck the overall trend, and I would like to see more of this. But I'm a little concerned with the way those stocks are, especially the tech stocks, just not happy yet. Is that actually a buy signal? Not really. We don't have the moving averages crossing over, so it's not sort of like, hey, that's a weekly breakout. You can see the big honkin' sort of weekly W. That'll confirm on a move through, what's that number, 6740, and we're at the trend line. So the trend line rules say, well, we got to wait for some sort of structural signal on the other side of the trend line. So I'm a little bit leery about being too bullish now on the market. So it kind of sucks, but it is what it is. Probably kind of like the coup de grace to all of this is we've built this breadth indicator, and I think it is really, really handy tool to help you just sort of see markets from an overbought, oversold perspective. You can see this is the most recent data print here, the 31st. There we are. Something that jumped out at me that was kind of bothersome, and I've been mentioning it to the audience. The country funds, or basically the entire world equity market, is officially overbought, both on the short and the medium term basis. You can see the S&P 500 is creeping up. It's not officially overbought yet. Interesting to see the crypto market. It is officially actually overbought on the medium term basis. Not quite so on the dailies. So, if anything, this message here looks very much like this stock market, the Dow sort of forecast, where, and we even put out messages, at least I did, put out messages here recently just saying, do you really want to be a buyer up here? I think that might be a bit dangerous. I wouldn't be surprised if, we had the Fed announcement. It was ugly. We're now slipping below this trend line. So that's an interesting level. I suppose, we get market structure signals here. We'll get sells. I don't think they're going to break the market in earnest ahead of the election. That's just too big of a football, the political football, if you will. But, you look at that image, and then I come over to the breadth indicator, and I see the Dow Jones Industrials, and that's ridiculous. The short is actually below the slower moving average, so the fast moving average is actually below it. The slow moving average is sitting at 100, so basically everything has rallied in the Dow, and everything is up top. And sadly, this is the business when everything, of course, is buy and everything's ripping higher and everything's just going nuts. Well, that's ironically enough when you should be thinking about a top. So the fact that this Dow Industrials itself, we have the S&P 500 on here, but we could probably pull the Industrials histogram up. I don't know whether we do a histogram. But you can see, this is ridiculously overbought now. And, the irony of it all is you can see it in the price chart. Price is starting to correct here. Probably the very first thing we should expect is 38.2s. Pullbacks into Collins dump chaser zone. I guess the pump chaser zone in this case. So if we go, where is Collins? Where are you, Colin? I know you're around here somewhere. There he is. So there's 38.2 is 31,300. And we're still sitting at 32,000. So you could easily see the Dow lose a good 1,000 points here. Would in fact, you can see where the 13 EMA is. It works as an excellent sort of check, a short-term check in the market. So that's also sitting at about 31.7, or about half of that. So that's kind of what I'm thinking is going to happen here through this election window. And the interesting thing is Dow actually looks quite uppy, but the NASDAQ, oh boy, it doesn't look uppy at all. And kind of like what I showed you with some of those blockchain stocks, this is starting to look a little heavy, folks. So be forewarned. If anything, I was quite pleased to actually see some strength in things like Litecoin. I think I had told you that we did have this little long setup. It's on the micro contract, so it's not big money. It's pretty small. Where do I have that? I have that over here. So live by the sword, die by the sword. We'll see how it goes. Ironically enough, half of the trader's job is to just sort of step in, strap shit on, and then, live with the results. Oh, isn't that weird? Maybe it's on a different screen. Anyway, I think the micro contract is down like $30 or something like that. So, we'll see how it goes. There's where the trade's on, and that's the position right now. I guess the issue that I have here is, does this turn into some sort of big-ass M top? It is interesting how we came right up against that level through that Fed event. And now we've come right up against those lows. And I got a funny feeling, like I said, through the election, this thing's probably trapped in a range here. That would be my interpretation. So anyway, we'll see how it goes. Only time will tell, as you can see. Not really that big of a position. What it really is a... Actually, you can't see. Isn't that weird how the numbers are not on there? Anyway, this is just a simple 2-to-1 risk reward. Buying this breakout here, risking against these lows. I will acknowledge this low is lower than this low, so it's a bit of a dirty bottom. This trade might be in trouble. We will see how it goes, and I don't mind. That's actually not. That's like a couple $100 on the futures contract. If we're right and they hold this range here through the election, I think coming out the other side, actually, I'm feeling quite uppy. And the reason why there, again, going back to our original blog post, I think we're in sort of like probably in this little area right now. So through a good portion of the month of November, we're probably just going to be going sideways and sort of chopping. Question, of course, is how beat up do these tech stocks get through that? And I might get stopped out on a couple of those stock purchases. But the actual cryptos that are at the bottom of the range and they're trying to turn, they don't look like they're ready to dump. I think it's just more some of the sort of weak stock proxies. These guys still look pretty darn strong. So anyway, we'll see how that goes. All right, so just sort of finish off this thought. Like I said, I was pleasantly pleased to see names like Litecoin jumping up. It does make sense given this sort of report on the broader market, wherever the hell that is. It does make sense. You should expect any one of these names, if they're spitting out fives, any one of them could pop at any given point in time. If we look at the dashboard, and probably along the same lines as the stock market, the broader crypto market is looking a little heavy. It's not nearly as bad as like the country funds or the Dow Industrials, but you can see there is our breadth indicator, the crypto top 30. It did roll over. We would consider this sort of like a weak sell signal, where the slope of the slow moving average is still pointing up. It hasn't quite rolled over yet. So the bears don't have a lot of sort of medium term momentum right now. You can see in the broader cryptoverse, we also got that same sell signal. And interestingly enough, this sell signal did come in from an overbought condition. So if anything, maybe the crypto market's gotten a little ahead of itself here in the short term. Kind of what I showed you with that the Matic and the Sushi and stuff, maybe needing to take a bit of a pause here just in the short term. Yeah, we're getting a little bit of, weakness coming in here on the broader crypto markets. So kind of along the lines of the Dow. Does the NASDAQ actually puke out here? It might. I think that we're in sort of at the very best, we're in a holding pattern here until the election. Very worst, we might be starting to roll over here in earnest. I guess the final note I'll make to this, we have a rule. Don't trust the first hour of trading following a Fed announcement. And I think this is exactly why. Coming right out of the gate, the Fed announced 75 beeps. US dollar tanked. All the risk assets are just all exploded higher, including Bitcoin. And then Mr. Powell started speaking, and he started basically, I think the message was, you may have gotten the impression that we're close to the end of raising interest rates, and that is an incorrect impression. That he believes interest rates will have to continue rising, and they're only probably about halfway done. And frankly speaking, I'd have to agree. Whether it be things like the TED spread, which is sort of a crisis measure for the short-term money market. With this, now we have to call it the Fed spread, not the TED spread, but I won't get into that today. Point here is if this ratio is at 100 or higher, then it actually means the credit market is in crisis. So we haven't rolled over in earnest here yet, and really the Fed is just following along the corporate interest rate market. The Fed's not actually dictating policy. The market is actually dictating policy, so you can see orange line here totally pukes out. The Fed spread ratio goes zooming above 100, and the Fed has to come along and scramble along and raise interest rates to try and bring that spread back in. So does this trend reverse? Interesting, you can see that the corporate interest rate market did start to break down well ahead of the Fed actually acquiescing and starting to raise interest rates. So, this is where almost all of the bureaucrats and the technocrats have got this completely wrong. They seem to be under the impression that the U.S. Federal Reserve Board actually sets short-term interest rate policy. And there couldn't be anything further from the truth than this. What's ironic about government agencies, and to a certain degree I think the Fed has become a pseudo-government agency, they always react late. They always do too much. They always go too far. And they always break the market. The question this go round is it the U.S. market that's going to break, or is it international markets that are going to break? I heard from Powell repeatedly, U.S. jobs market, inflation sort of proxy market is still very, very strong. And when I heard him pressed about his feelings about the international community, about the situation for the Europeans, about the situation for the Asians, all I heard was 2 letters. You can imagine exactly what those 2 letters are. Let's see on the comments whether anybody can use their imagination. What do you think 2 letters Jerome Powell basically said to the rest of the world with regard to how many F's he gives about their worries about U.S. short-term interest rates? He doesn't care. Let's put it that way. So, with that kind of backdrop, there you go. Thank you, Sonori. Somebody was listening to my silly sense of humor. So, there's your sort of macro backdrop. I'd be curious to see how Paul has positioned himself and his community coming out the backside of this Fed announcement. Was this rally enough to actually get him to the point where he's actually starting to think short again? I suppose we'll hear from him on that. And then maybe we should also check in with Ben and the spreadsheet and see how we did on our grand predictions last week. I can't remember. I think this was the chart that I was looking at. So, with that said, there is the Bitcoin on stamp, my Tesla 30-minute charts. I suppose if I'm day trading this stuff, I'm thinking down right now. I think this was a notation for the Fed announcement. I guess it was right in there. So it is interesting. Like I said, what a great analogy of never trust the market. If you're going to learn one thing from tonight's broadcast, never, ever, ever trust the market for 1 full hour following a Fed rate announcement. So 11, I remember 11:05. Yeah, you can even see it right here. So there is the announcement. It actually came in at a weird time there, eh? Right around 11 o'clock on the nose. Usually it's around 11:30, but 11 o'clock on the nose. Interesting that the first spike was to the downside. Then there was a violent reversal all the way to the upside. And everybody, like I said, when I was... we had a room running on the site, which we kind of like to do every Fed announcement. We just sit and sort of, comments from the cheap seats about Jerome's hairline and how many. And I don't know whether you guys noticed. I find it kind of interesting. It's a little bizarre. But all of the female reporters, they love to call Jerome Chappelle. Like it's some sort of secret lover's code or something like that. And none of the men like to call him that. I don't get it, but it's a weird thing. So every time a woman reporter would come up, she'd be like, Chair Pal, make love to me, please. I don't know. Terrible comment, I know. But when the men reporters, it was, all right, Mr. Chairman, what do you think's going to happen next? Or kind of thing. Anyway. So really, really good lesson where the market started out uber bullish, but then by the end of the session completely crapped out. Great, great lesson for everybody there today. So I sure hope you guys, if nothing else, especially you crypto kids, because I think Bitcoin's basically mainstream now. So Bitcoin's going to have to follow the rules just like all the other risk assets. The only other thing I'll add to this is our next big catalyst is now going to be on the 8th. So that is right there. And it'll be interesting when the polls actually close, because I think the polls will close somewhere around, I think it's about 4 or 5 o'clock in the afternoon. My time, which would be 7 o'clock back east. I think that's roughly around when the polls close. So that's our next sort of big catalyst window. And I don't know. I get the feeling that we're just going to be back and forth, choppy through all of this. So let's see what happens. All right. Paul, are you here today?
Yep.
There he is. All right. So... he's got his clock set to Romanian winter time, and of course slightly different than North America. We set our clocks back, I think, a couple weeks from now. So my apologies for getting you up a little bit earlier in the morning. Probably
No
wasn't
problem.
really too cool for you. But if you would like to show us what you and your group have been seeing through the week, I'd love to see what your perspective is.
Yep. Just a second to share the screen.
All right. I will stop presenting. Stop screen sharing. Here comes Paul, Crypto Traders Arena. So sexy. Every week next week he's going to have pictures of hookers and below on his screen, right?
No.
Just kidding.
No, I'm consistent.
Okay, I'll put myself on mute. I will hit F11. There we go. So you got a little fuller screen. There you go. Looks good. I'll minimize myself. I'll put myself on mute and tell us a story. What do you see happening, sir?
So, We had the last 2 weeks behind. We didn't have too much volatility. I was forced to stay only on the scalping side of the market, and we managed to change our approach. So we start doing live streams and posting and trying to frame only the scalping side on Bitcoin, Ethereum, mostly Bitcoin and Ethereum. So last week we had 11 trades, 5 wins, 3 losses, and 3 scratches, and a nice profit of 14%. That means we had a nice risk to reward on our trades. We tried to maximize the profit, moving the stop loss and profit. Don't take all the profit at 2 to 1. And last week I had a nice scalp. But this one is just an exception. I just put a scalp on 3-minute chart, 1-minute chart, and I was just trailing the stop loss in profit, and I managed to get a really nice treat on this trade. In crypto space, we waited long enough for volatility to come back, and the last week we saw some volatility. We focus on day trading, obtaining nice results. We had the volatility last couple of days, but let's see what we have on a weekly chart. On weekly chart, if I'm taking a look, I could see a nice bounce, just a nice bounce from the 2017 all-time highs. Let's see more than that. I don't know. It's just a bounce in a bear market, at least for me. Everyone says it's a bull, it's a bear. No, we are still in the bear market, but even in bear market, you can get a nice bounce. And usually in bear market, you will get a straight up move and then back down. Bear markets rally, they are pretty violent. Let's see on daily chart. So on daily chart, we had a nice bounce, a nice W. Nice W confirmed at this point. So it's okay. When I see a reload zone, the other side of this trend line, I see a nice W. I have a setup on daily chart. So we have a long setup, an LJ. But for an entry now, like I said Sunday, wait for a retest at 20K, something like that. Don't chase the market, go and buy at this level. Wait for a retest of 20K and then reassess, maybe go on lower time frames and try to frame along. Indicators confirming the price action, bullish divergence, and MACD really in the past was oversold. That's nice. RSI, nice bullish divergence. I see many more than one on RSI. Even OBV starting to go bull to start putting some Ws. Sunday on the 4-hour chart, what I saw was breakout from this range, 1 month long range, really nice bounce exactly in the 61.8 short reload zone, retest of the range and back up to the short reload zone. For me, that means we formed another range in this area. So this one from the short reload zones, from 61.8 short reload zone to the top of the range, it's another range. So I will keep playing the range game. Really nice way to see the market. So on 4-hour chart, why I was a bit bearish? Because we saw on the indicators bearish divergence on MACD. Look at RSI, even OBV had a bearish divergence Sunday afternoon. All indicators pointing down and the price was up. So my plan says at least wait for a retest of this top of the range, if not lower. That's why I wasn't bullish in this report. Bitcoin dominance on 4-day chart. Nice bounce couple of weeks ago. Now it's just retesting the long reload zone. I'm still expecting to touch at least 61.8 and then we'll reassess. On the long run, I'm expecting Bitcoin dominance to go lower, below 40, below 30, maybe 20. but not now. Now we're in a bear market, so this range is good enough to play around. The mid 40, it's good enough for me to see the Bitcoin dominance. In the big picture, we are at the bottom of the range. Maybe we can put at the lower part, we can put like in the past, we can put a W, and Bitcoin could take some dominance back. At this point, altcoins, they are stronger than Bitcoin. Ethereum versus Bitcoin, same chart, 4-day chart. We had a nice retracement in the middle of the range, violent move up straight to the short reload zone. Like I said in the report, keyword here is caution. Just wait. Don't think Ethereum will flip Bitcoin. Not at this point. And if you take a look now at the chart, you'll see this one is backing off a little bit. Total 2, nice bounce from reload zone, big reload zone, smaller reload zone. So we have some move to the upside. I like that. But if you take a look from July until now, it's just a range. The price is just ranging from 500 billion to 700 billion, something like that. Nothing to think about. Yeah, market is bullish again. Yeah, a nice bounce, probably. Yeah, but no more than that. We still have a lot of time in this bear market. In my opinion, we are just in the middle of the bear market. We didn't see the last capitulation candle. But it's just my 2 cents. We post the big reports on this one. We had last night, we had Fed interest rate. Like Brian said, yesterday I didn't trade it at all. I only put a long on Litecoin, and that's it. It was a day off for me. But even for the people in the group, I said, don't trade, don't try to outsmart the market. Wait on the sidelines, and after the Fed report, you have time to frame a new setup. Even today we can look at the charts and start scalping again. As you saw in the market on this one, what do you want to do in this area? The price was, let's keep the 4-hour chart. Before the news, price was exactly in this area, $20K in $400, down, up, and back at the original place. Only stopped out everyone who was short and long in this area from last couple of days. So it's best to sit out and wait. You manage to get some profit. Let's say you worked 1 week or 2 weeks to put to have some profit in your account, and you put a scalp on lower time frames in this area, and a violent move comes against you, and with the slippage you get on crypto platforms, you will not get -1 year. You'll get -5 or -7 or -8. So you lose all the profit you made working 1 week. So it's best to sit out and just let the market cool off a little bit. I think on altcoins, it's my idea is to wait for a retest of the initial Ws you see in most of the altcoins. Yeah, altcoins outperforming Bitcoin, but still, don't chase the market. If you see the original W and you see the market is broken up from that W, wait for a retest. It's best to wait. Keep in mind, we still are in a bear market. The market will not go without you anywhere. So don't chase the market. Yeah, I see Litecoin, I see eGold, I see something else. It's still pumping. No, even on Dogecoin I posted on Twitter, don't chase that one. If you miss the original entry, let it be. Draw a reload zone and wait until you'll come back. We'll come back in reload zone and even lower than reload zone, maybe 88.6. Usually in the bear market, I mean. So investors, definitely a nice way to continue your DCA and little old lady plan if you know what that is. I posted some ideas, ZEC versus USDT. We had, if you put a complete chart with indicators and all of that, you have a nice location, you have a nice bullish divergence, you have daily W. So it's okay to hunt. My idea was to wait a bit lower, but I posted this one because I see 1 low, 2 lows, 3 lows, 4 lows to protect my stop loss. So it's okay to hunt on this one, to just take the breakout from the W. Keep in mind, it's a daily chart. KNC on 4-hour chart, same idea. Just the big W. And if the market will go lower and take your stop loss, no big deal. It's 1%, no more than that. Link, same kind of idea. Reload zone, nice range, nice W. I don't post the indicators because I want people to see the price action, but indicators look really nice on that one. Even DeFi USDT on Binance had a really nice W and really nice W in reload zone with all the things, bullish divergence, nice W. So if I zoom out a little bit, you can see nice W on this one. Yeah, we are still at the entry level, so you can still go and pick up some coins on this one. Condition for day trading, my idea is they are still hard. We are not in that environment where everything is going up. You just put the pump chaser zone, wait in pump chaser zone, pick up some coins, and then sit and wait to make some profit. It's hard. It's still in a range. If you know how to trade in a trading range, yeah, you can be really profitable. But if you don't know and you all the time you're expecting to have a trend, you'll be chopped out. Usually a trend it's easy to trade if you know how to do it. So you don't buy at the top and sell at the bottom. It's not a trend. It's a range. So you have to assume the price will go to the middle of the range. Let's take a look at Bitcoin on 4-hour chart. Like you saw in my presentation, we had a range. Yeah, this was 1 month range. Really nice profit in this one. We just sell at the top, buy at the bottom, put the take profit close to the middle of the range. Was a profitable month for us, really profitable one. But at some point, this range will have to be broken. So we had a violent move up. We managed to scalp all the way up until the top of the range. And we stopped exactly at the 61.8 short reload zone. Hit the 61.8, back to retest the range, back at the 61.8. And at this point, I'm thinking another range. But if we clone this range from the bottom and you just put another one above, as you can see, you just put another range above, you will see the price tends to go in the other range, and we can go up until 22K, something like that. At this point, we have a smaller range, so we will play the range game in this one. It's a smaller one, $1,000 difference from the top to the bottom, but it's still playable in scalping land. So if we go on 5 minutes, 15-minute chart, yeah, you can trade this one. If it's half of that, it's $500. It's harder to trade even on scalping. But if we have $1,000, yeah, we can think long at this point. Wait for a clear setup at the bottom. Wait for a clear setup at the top. And if you manage to get a 2-to-1, 2.5, it's good enough. With a win rate of 50, 55 on a risk reward of 2, I guess you are consistently profitable. You're making money in the market. It's everything that matters in this game. You know you're winning when you are consistently profitable at this game. But to win, you need to respect the process, respect the risk management and your setups. If you don't respect that, doesn't matter what tool you use, what technical analysis you learn. Everything else is just on the second place. First one is respect the risk management, respect the plan and the setups. As you can see, I don't have complicated setups. I only use 61.8 Mountain Man. I use LJ's Shark setups, and I managed to make a nice profit. I managed to get a here you can see, let's zoom out a little bit. So you can see a move up, a move down. And if I draw a reload zone, you can see here is a 61.8. Just I put a short in this area with the stop loss at 70.6. I made a 2 to 1. And this area, after we broke down again, I just put a long 61.8. You see the market is collaborating, and I like the fact is like Brian and many TRI said fib pong. So market will go from fib to the short to the long reload zone, something like that. On daily chart at this point, let's put a daily chart and see what we have. At this point, I don't see anything on this one. I'm waiting a bit lower or at this level to hunt for a long. At 20K, it's okay to hunt for a long on daily chart and put the stop loss all the way down to 18K. But this is for a swing trade, and I'm hoping for a 25, 28K, or 2 or 3 to 1. But in the rest, range and another range, and I'm just playing this game until I'll be stopped out at some point in time. That's it from my part. Not too much to say about the crypto market. I like the fact that we bounced and we broke the range. Now we have another range. Let's play this one. Let's play level by level. Let's don't forget it's a bear market, so take your profit. Don't hope for a 20x or 30x, something like that. Take your profit aggressively at 2 to 1, 3 to 1, at least close half of the position. And let's accumulate on altcoins. They are at the bottom of the range. Let's accumulate for the next bull market. And let's make some daily profit or weekly profit on day trading Bitcoin and Ethereum. Brian, that's it from my part.
Gotta hit the microphone button over there on OBS so YouTube can hear me. The only thing that I think you're missing is...
What?
That image. So this is the GIF that we always pass around when we're sitting in trading ranges and we're just watching the market trade back and forth between 38.2s. So there you go. There's Paul. And do you have like a trading buddy over there that you like to work with? I know there was one gentleman that you were talking about that anyway, I can't remember. Anyway, so there's
it's a guy who learned a different technical analysis from ICT or something like that, but he uses our tools and his tools. So he'll first look for a reload zone and then we'll put the market structure how he is playing. But at this point in the group, we have more than 10, 15 good traders. So a lot of ideas.
Wow. So, Ben is either the orange or the gray cat. I'm not quite sure which. Anyway, nice job, sir. It is now 20 past the 7 o'clock. So, well, we've actually been going for quite a while here. What I would say is we did have, and I don't know, I don't want to put you on the spot, Ben, but I remember in the daily brief, I had mentioned that I'd wanted to pick your brain and your magic levels on what was going on in Litecoin. And was that bottom that was coming in off of Litecoin? I think it was coming in off the 88.6. Would that trip up one of your, where the hell do I have that? Did you watch the daily brief today? Did you hear me talking about you behind your back?
No, I didn't. No.
We were just wondering. And actually, Shark Toshi reminded me over there on the YouTube page to just sort of pick your brain on this. Like now that this W is trying to come in, assuming that this W does try to come in. Sure. And I believe that the W is coming in off of the 88.6 fib. How does this work in your math? Does this imply that Litecoin doesn't have a very good chance of getting back up? Yeah, there's 88.6. So it's fascinating how the market is trying desperately to W right off of that level. So I'd just be
Yeah.
curious, like according to your math, what is this telling you? Is it telling you anything?
Well, it tells me that to get up to the 72.36 level, which is above the 86.18. So it's currently like making a bottom around, it's kind of oscillating around that 86.18 level, which is, I guess, 50% lower than the 72, right?
Uh-huh.
So a move up to $115 would be a free position. So, and then also that that move up to $237, being the 50% rule. Oh, what have you got? 226.
Roughly.
Yeah. So, yeah, around there is going to be the 38 of the 115 level, that it would double at
All
if it
right.
moves double from here. So it makes sense that it's people are stepping up at this level, in the hopes that if it doubles from here, all it needs to do is to go to the previous support that was made at that 72 level, which is 115-ish
Yeah.
dollars.
Well, it's
Yeah.
interesting how we do have this sort of high. I mean, it's not really the best high to low trend line, but it is an interesting trend line that seems
And
to
the
line
other
up nicely with that empire top there. And it looks like that's just about double the price. So,
right, and that's taking it off the high. If you take the if you take it off of the most, like, kind of like the 52-week range high, then the bottom, that came in there at $42
mm-hmm.
is bang on 86.18. Like the wicks just touch it. So that says that going up to $84 is also going to be some kind of resistance for whoever stepped in there and held up the market.
Yeah, well, you can definitely see there is this important sort of shelf here. Kind of like, all my Romanian buddies, and you know who I'm talking about. If we can clear through this high, then look left, and it's all the way up into that wick right up there, probably right into this weekly 200 SMA. And
Right.
against that previous low, this almost
Mm-hmm.
looks like a little open air pocket here, but still got a lot of work to do here. This is by no means a slam dunk, and my hunch is actually, like over the period of November, I think I talked to you guys about what I'm sort of seeing, and I don't know, Paul. I got the impression from your conversation that you're still very much thinking we're stuck in a trading range kind of thing, eh?
Yeah, but on Litecoin we had some news. So Litecoin
Oh,
is
what was
oversold.
the news? Wait, is Charlie come out of the
Some
woodwork? What the hell's he
no
up to these
something
days?
I posted in the chat and
Oh, did you in our little in our fun little room here?
yeah.
All right,
So
let's
something
see.
about MoneyGram.
Can you just paraphrase? What the hell's going on?
Uh,
MoneyGram. Oh, I
yeah.
see. Hey, do you remember these? God, okay, so what do we got here? MoneyGram customers in the U.S. can now trade and store Litecoin by using their mobile app. The MoneyGram app is made possible through the company's existing partnership with CoinMe. All right, so that's
Yep.
what's driving the story here today, eh?
Yeah, and a
That's
lot
kind
of
of
people
cool.
from the group they put a short at the top when they saw the initial pump.
Yeah.
But I prefer to see a wake up check, and I put a long at $58. So I'm in a long now.
Ah, I see. Well, if I
Only
was
trade
wearing
for
my
yesterday.
day trader's hat, let's see, $58. Wow, so you
Yeah,
snuck in on this pullback here.
yeah,
And your buddies who shorted up here, are they kind of
yeah.
pissed
They
off right
shorted. They
now?
made some profit. No, from the initial bounce. You see the first bounce. They just put it at the top. They tried to frame a short. They managed to get a 2-to-1. They closed the position. But in that dump, I managed to put a long.
Hmm.
But I
Hmm.
was a day off for me. I was from my phone, so not too much technical analysis with what I could see on a Binance app.
I guess there's your Colin and his pump
Yep.
chasers in that. And actually, probably they were active right through there.
Yeah.
So I hope your buddy took profits into that.
Yeah, exactly. They took profit.
Yeah. I suppose if that's the working trading range, then yeah, I might go with something like A to B.
Yeah, I could set a really nice bot, but we don't have three.
Where is it? Boosh. There we go. So yeah, this is sometimes because remember Brian's sort of chicken shit. I like to see these things set up where I can see there's a whole bunch of guys that are defending my trade. So and it doesn't surprise me. We're on a 3-minute chart here. So. But looks like there's a bit of market structure that came in you could have used to help frame that trade.
Yeah.
All right, and come on, you right up in that area there. That's kind of cool. And if that's the case, then where the hell does Charlie say he wants to go? All the way up to 67 bananas. There you go. So Paul, I think, is going to be buying new guns and uniforms for his whole police squadron, local squadron there.
No.
Paul, because Paul's like, were you a beat cop? Were you actually like walking the beat?
No.
All right. Anyway,
Was a different thing on my side.
pardon me. Sorry.
Was a different thing. I was not a street cop. I was
Okay.
mostly in the office.
All right. Well, anyway, point of the matter here now. Once police officer, now insane crypto monster capitalist. when you make your fortune and you go and buy your big ass boat, you better put some sort of reference to Romanian police.
Yeah, maybe.
Anyway, great to hear the success you're having. I love that. And the good part about it, right, folks, is that doesn't matter if you're black, brown, white, blue, yellow, green, old, young, male, female, doesn't make a rat's ass of difference. In fact, that's the one great part about trading as a vocation is no racism, no sexism, no ageism, no isms. I mean, you either know what you're doing and you can make money from trading or you don't. So this is why, I mean, if somebody was going to ask me, well, Brian, what do you think's going to happen? I wouldn't have a fucking clue what's going to happen. But because I like to use these setups, at least when I draw all of this out, we did 33, didn't go beyond 66. We draw trend lines. We broke the trend line. Can you find 3 higher lows to risk against? This one's a bit marginal, but really, to all intents and purposes, it's just, okay, well, you know, there's the market structure, there's the bottom, and there's my price objective. And the good part about something like this, we've had move stop to scratch level hit, so you shouldn't theoretically lose any money on this trade. And now we're coming up, we hit move stop to trailing level, so, you know, you could probably start moving your stops up and locking in profits, and you just have your AOCO, which is a old... I think it's a floor broker term. I don't know. I used to use Cunningham T4 system. Anyway, it was automatically order cancels order. So I would have my sell order just working at that level. And if the market zipped up top there, boom, I'd be filled. And then all the other stop loss and positions, everything else would be canceled. So, it makes sense. Just a trader's life. The one thing I really like about Paul is he just shows up to work every single day. And it's darn impressive to watch him in action. I'll tell you that much by crackers. So way to go, dude.
Yeah, you have to be consistent.
Pardon me?
You have to be consistent in this environment.
Well, more importantly, you have to show up, right? A lot of people that I find, they can be consistent for a week or two, including myself. You know, I'm not saying this is easy and it gets any easier over time. In fact, I went on a trip over to Portugal, and since I've been back, I kind of like been trading really shitty. And so as a result, I've had to force myself to dial things back, and I don't know how long it's going to take for me to get back into my groove. But that's a trader's life. And the one thing is you got to learn how to self-regulate. And if you're in a funk and you're just not seeing the market clear, you have to tell yourself to dial it back, slow down. And unfortunately, I heard this story recently of one of our students actually didn't heed that warning, got into a bit of a spiral, and actually ended up blowing up his account, which is really sad. But it does happen, folks. So be cognizant of that. Okay. So, lower time frame, long setups on the old Litecoin looking good. Interesting to see, actually, like fundamental analysis actually pushing the story. This is half of why I like to have you guys as rational investors. What we really want to find is we want to find fundamental drivers in the market. And basically MoneyGram here becoming an added source of demand for Charlie's coin. That's a fundamental driver. And then you connect it. I mean, hopefully everybody can see, well, gee whiz, look at this beautiful bottom down here. This is probably where Paul was wanting to buy. But maybe yes, maybe no. I'll let him talk about that. But hopefully you can all see this. I mean, beautiful bottom down, or right off the bottom here. So all you lower time frame players, that's the kind of shit that you're looking for. And like I said, I mean, you just have to build your plan. You got to show up day in, day out. And, I also think it's not a bad idea, all of you aspiring traders, to do exactly what Paul has done here. And write a little newsletter on a weekly basis. On this Sunday, just go through the exact same process that he's showing you guys. I think that actually is extremely valuable. And while you're just starting out, you might think that your newsletter is garbage and it's not really that valuable, but it just gets you into the habit of just doing the process day in, day out, week in, week out, all that kind of talk. So anyway, okay. So it's about 7:30 here on the West Coast. I gave you, of course, a big old rant to start off with. Paul's given you a nice little sort of summary off of lower time frames. And frankly speaking, I actually like Paul's thinking here. And I kind of sort of suggest that in my rant, that what I just saw here was just a big fat trading range. And I wouldn't be surprised if maybe, you know what this is it's not Paul and his buddies. Maybe that's Paul and that's Brian. That's Paul, that's Brian. That's Paul, that's Brian. That's Paul, that's Brian. We used to have another guy on the site years ago that it was same sort of thing. And we used to like constantly post this. I haven't been that active in Bitcoin in particular and crypto in particular, but I did pick up a couple interesting plays. I kind of get my ass kicked on a couple of them. We'll see how it goes. But actually, the crypto names that I did bought are treating me fairly well. So anyway, we'll see how that goes. I think what we want to do now, and Ben, I don't know, did you want the floor? Is there any kind of presentation or any sort of thoughts on your mind that you'd like to share with the good people here tonight?
No, the one thing I was going to maybe bring up is I know you had some issues with the app moving forward, like making it something that's really valuable for people with how they can reference it. And what I could do is I could put my hand up and that whenever we do analysis on a chart, perhaps we could do like a template of what people can expect to see on a chart.
Yeah.
And if
I really love the, are we in a higher time frame trade location? Do we have divergence? Do we have market structure? It could be something along those lines, but what I've been noticing recently is actually I've been reaching out to the community and reaching out to people that I'm in groups with, and I just want to get your feedback. So all of you people, and I think we got about 20 or 30 people over there on YouTube. And if you guys are enjoying the show, please hit the like button, subscribe, ring that bell so you get notified. You guys know how it all goes, right? Where's our screen here? Ring the bell so you get notified when we fire this up. Hit the like button so Paul gets all the hot chicks. And where's the other one? I guess subscribe so that YouTube algorithm is happy, whatever. Anyway, 20, 30 people over there. So, please, first off, maybe give us any names that you might be interested in us taking a look at, and we'll be more than happy to have a boo. by all means, if you guys have weekly W's working, I want to know about it. And then, like Ben was saying, here is the app right now. We did have kind of an odd thing where it was just spitting out our disclaimer here, and I can understand that's not really useful to people. We did in the past, like Bitcoin here, we did have chart lengths in reload zones met on the momentum div. I suppose what we probably should do here, Ben, is actually have like a date reference for when this was last updated, and I think that's sort of as the 28th of September.
Yeah. So you can just look it up by the coin rather than by the date, and then it'll just have every chart that's ever been done for that coin.
Oh, sick.
Yeah.
So if I just go BTC like that.
Yep.
And then go like that, and it'll just be all... Oh, I see. So the charts, they just go through time. All right. That's cool.
Yeah.
Awesome. And the latest one we did here was 28th of September. We also did another one here in July. And back in July, we had location, momentum, div, and structure. It's actually be interesting just to see what that looks like. Where's that chart? I guess that's that chart. Oh, I remember Paul... Of course, how ironic, right? We've just been sitting here playing in this trading range for what seems like ever now. So, suppose if we come back to that 4-hour chart, maybe we see the same thing. So back in, nope, that's not big enough. Let's go maybe the daily chart, and then this starts getting messy. Yeah, there we go. So how ironic, eh? There is July. We've just been sort of sitting here in this range for quite some time. If anything, I hate to say it, this is getting a little dangerous because we really want to get the hell out of here. We really don't want to be stuck in this range for too long. I'm worried that as soon as this 200 period moving average comes down, we get close to price. Yeah, let's get rid of all this stuff. This is starting to look again like that 2018 bear where it came down to 6,000. Bounced, came back down, then bounced, and then the whole market just was convinced that this was a floor, and then there was one more puke out. Blech. So I don't like the look of that. I was kind of hoping that we'd get out of here, but it is interesting that as I said, on that little micro contract, I strapped on along there, and I'm willing to take that risk. So that's basically where I am right now. Something along those lines. So we'll see how that goes. Also, too, it's kind of interesting because if you actually go look at that micro contract, MBTC, I think that's what it is, the micro. Maybe there's no C in there. Yeah, there it is. Interesting how there's a juicy gap sitting right up at that 200 SMA. So that's sort of why I really like that as a target right up there. Interesting too, fascinating triple distribution here. So theoretically, profile wants to look like a parabola, and you can see this profile is actually like 3 parabolas. So all of this area should be filled in, all of this area should be filled in to create one big parabola. So we'll see how that goes. I'd be surprised, actually given where the 200 SMA, that gap, the fact that we do have this bottom technically working, I'd be really surprised if we crapped out right away before there was some sort of counter trend rally. But as Paul was sort of saying, and I think that's perfectly accurate, we are still stuck in this trading range. And it's getting kind of boring down here. Can we please start leaving this range? In fact, actually, I really like that. It's interesting how the cash market looks so much cleaner than that futures market. Anyway. Okay, so, there's somebody wants to, where is Colleen? I kind of miss Colleen. Yeah, I used to say ring Colleen's bell, right? Yeah, and the problem is that this is exactly what happens in bear markets, Adam. You probably noticed it on the site, right? When price comes down here. Remember, God, it was awful, right? When, Alan was there on Saturday Night Live and went on YouTube, and there was these weird sort of Prince of Nigeria guys shilling Doge. and trying to beat the YouTube algorithm and Google algorithm. They were going la 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 every second sentence, so they wouldn't get busted for being blatant shills. And then we had people in this part here say technical analysis doesn't matter. This time it's different. Everybody and their brother is bullish, and rah, tons of participation, and what ends up happening? Boom. So now we've actually gone through the poop. Ironically enough, and you guys all know my long-term charts, even if we just even use that low, we are now finally at or below reload zones. Now's the time to actually be most interested in this. And, do we bottom here, or do we bottom maybe at 88.6, anywhere down in this area? I think the answer is yes. Do we have a counter trend rally first, maybe to test these highs before we roll over? That's what I'm betting here right now. But if we bust through these lows, I'll walk away from the trade. It's not that big of a deal. But ironically enough, like once you get down into this area, a lot of the people are just going to be simply gone. And a lot of the people that you really liked, that, they were here, and as long as we were in a bull market, they were more than happy to make money and keep killing it. After a while, of course, you get a little sick and tired of Brian's bad jokes, and just waiting. And, often what ends up happening is people drift off, other shiny objects appear on the horizon, and we just don't see them. The good part about it, though, is when the bull comes back, usually a lot of them all start waking back up. And I know there'll be one German gentleman whose first name starts with an F. You know who you are. And I only hear from him at the very tops of the markets. And sure enough, he joined TRI and took the education program here. Hell, I went even over to Germany, and I stayed at his house with his family right here. And then he just disappeared all through here. Poof, vanished. And then all of a sudden, out of nowhere, price is up here, and Frank comes right storming back. Hey, Brian, no, I've been here the whole time. Of course, he's gone now. I don't know where the hell he is, but I'm sure as soon as we get back up talk, we'll hear from him again. So that's just the way capitalism goes. And we are, let's face it, all of you that have actually sort of suffered through this and haven't blown yourself up and are still interested in this space, I say it on the website quite often, give yourself a pat on the back, because most people that got interested in crypto here, they are gone. They're yesterday's news. So, and then, if you can do what Paul does, you can get in there and make money on a fairly consistent basis, just, day trading. Having fun off the lower time frames. So, as Paul did point out, we are in hard mode, so this ain't easy. But at the same time, too, if you can build a plan to take advantage of ranging markets, there's probably some money to be made. Okay, so couple requests. And I suppose I can do it this week. But XMR, somebody asked us to look at XMR. So I guess we've and actually, you want to hear something really cool? This was actually interesting. Actually, let's don't have it on. Let's see if maybe they have it USDT. If I understand correctly, there's a fairly big crypto conference in Lisbon, and I was just over in Portugal. And we had a lot of fun, Manuel. And actually, it was kind of funny because I even acted as a beggar on the side of the street. And as Manuel was walking by me, I was like, got any spare Bitcoins? Got any spare? And he'd like double tick and looked at me. Hey, Brian, what are you doing here? It was really funny. But Manuel and I, here we are. Look at Brian. Holy shit. Has he gotten fat and lazy in his old age, eh? Anyway, there we are in that was in Lisbon in the what's the castle there called? I can't remember off the top of my head. But anyway, so there we were. We had a really nice visit. And actually, my joke is Manuel here was at the conference today, and look who he was rubbing shoulders with. Hello. We all know who that is. I don't know, maybe. Oh, you can't see it. Oh, my goodness. Oh, I thought I could maximize this window. How do you do that? There we go. I don't know. You know who that is? So, Manuel and CZ were getting down, getting to know each other. So that's kind of cool. So it was, I mean, I've never met CZ before, but it's sort of like, well, I've got a friend who's got a friend who's got a friend. And so now, you know, this could be like the 6 degrees of separation with what's that guy's name? Oh, I can see his face. Anyway, there's a famous Hollywood actor. Anyway, so I thought it was interesting. Manuel said that he actually had a nice chat with CZ. CZ was very approachable. And I wanted to give a shout out to him. He says CZ says hi to the gang. So I thought that was super cool today. And I can now say I've got a friend of a friend of a friend. Kevin Bacon, thank you very much. So here's our Kevin. He's our Kevin Bacon. So I'm related now to CZ through Kevin Bacon. Try and figure that one out. Anyway, so lots of fun instead of chumming up with the guys in Portugal, and way to go, Manuel. He's chumming up with CZ. And he said, and I even said, you know, that one of the reasons why I think CZ has done so well is he even said, like, CZ didn't know him from a hole in the wall. And he said that it was very approachable. There wasn't any sort of attitude or, you know, I'm better than you kind of thing. He was just very down to earth. And I said, that's probably the number one reason why he's done so well, is because he is very down to earth, PMA for the win, no attitude, no cockiness. You know how there's a lot of guys in this crypto space who are super cocky, Doquan, excuse me, and they absolutely get destroyed. So, if anything, yet another testament to just try and be a good person, be nice, try and help people out, and don't listen to Beamish, listen to CZ. That was CZ's message, was just try to be nice. So anyway, there's a fun little interlude for you. Okay, so XMR versus USDT. You should all look at this and go, well, this has got one setup written all over it. I might say that you had a pretty nice counter trend rally into moving average resistance. Boom, and a nice little moving average cross off of a double bottom as well. Probably also say too that the area where this market bottomed was basically at or below reload zones. So we always like to see that. Might even argue that that's probably a pretty important horizontal support and resistance level. Looks to me to be pretty important, and sure enough, like doink right off that level there. So the way I would interpret this is this looks very body. So that means we probably want to go bot setup. So did we correct 33%? Yes. Did we go beyond 66? No. Then I will take my replicating tool. And so this creates that AB equals CD kind of thinking. So AB, and if this is a continuation pattern, CD up into that area. We could probably, so, you know, if you're thinking about actually getting in on this, I like the idea that, oh, what a surprise. You can see how this basically takes that trade and it breaks it into quarters. And so the trade is nothing more than buying the bottom quarter. And that's your risk. And you're looking to take from the market these 3 upper quarters. Boom, boom, boom. Could you maybe time this a little bit better? And actually, I like to call this front running the bot, where yes, this is the bot level. And frankly speaking, if you strap that on, you know, even on a stop, right, that level there. Oh, come on, you cooperate. Anyway, something like that. I don't really have a problem with that. If you were like, well, Brian, I'm gonna risk to a break of these lows, and if they're broken, then I'll walk away. I used to try and juice the returns a little bit. I used to like to add in, okay, well, if I can get structure underneath the bot level, then I can front run the bot. And then that way, if we do get a zip up to, say, the 50% level and, move your stop to scratch and it pukes out, somebody says something, whatever, at least you can walk away with a little bit of a profit. This is, I think, probably more of like almost like a position, or maybe even like sort of halfway between swing and position trade. Certainly not day trading. So, there it is. I think I heard Paul typing all the way from Romania. Man, he types loud. Something along the lines of this being the correction did come into 38.2 to 50%. A lot of people on the site refer to this as the Collins pump chaser zone. So you could use that as sort of a reference where to think about markets bottoming. If I'm thinking about trend continuation and this ABCD kind of thinking, what I'd really like to see is a nice break of downtrend lines, although I don't think you really even got that yet. So still sort of waiting on that. And this is going to be sort of a comfortability issue. Are you comfortable with just taking the bot level and just living with the results? Some people are, some people aren't. Some people would be like, well, I have to see this trend line breakout and then a W on the other side of the trend line to give me enough confidence that I don't start to freak out and pull my hair out and stuff while in the trade. So I think you can see a number of sort of setups trying to play themselves out here. The only concern I suppose I would have in the short term is, do we have like momentum on our side? I don't see volume really leading here. Maybe what we need out of Monero is some sort of fundamental news, kind of like what you saw with Charlie. The only problem with that Monero is I think it's a privacy coin. So it's I don't know whether they're going to really want to be touting a story. Come use our coin to avoid the IRS. That's not really a very good sales pitch these days. So I think if I was interpreting what I see here, that's sort of my interpretation. Probably you could just try and get like upside objectives to try and figure out where the heck this thing kind of wants to go. We could do things like chaos theory off of this bottom. So that takes us up 2.618. Oh, what a surprise. Look at that. Talk about a handy little tool to have in your back pocket, eh? So I think that kind of explains that rally and then why we failed where we did. I don't know whether we actually got up to that level or not, though. Maybe. And then interesting how 4669 is going to be a tag of that level. And in fact, these trend continuation patterns, this is a very sort of symmetrical harmonic pattern. It's called the AB equals CD harmonic. The only issue here is that there can be several different versions of this ABCD. Sometimes you get what's called an alt ABCD, where it actually goes all the way up to things like 127s. Although that's not going to work. Let's go. Maybe I'll go extensions. There we go. Let's see how that works. Oh, that's going down the wrong way. There we go. So, interesting. Notice how 4669 lines up nicely with 127. So believe it or not, this guy actually, if this thing does rally, is probably projecting up into that 127. Then also too, you could do a fib off of this entire range here. And my hunch is things like Mountain Man levels and those kind of things are probably around that 4669 level as well. So if we go, what do we want to do here? Reload zone. Boom. There we go. Interesting. So kind of like almost like right in the middle. If you can think of the reload zone as like a tennis racket, which is kind of weird, but bear with me here a second. So tennis racket, and then the head of the racket comes out like that, and then back in. Terrible tennis racket. You know what this is? This is like the little old ladies tennis racket. If you ever played tennis, the little old ladies always play with oversized rackets. So, point of the matter here is in tennis, when I used to teach people how to play tennis, the key was you really wanted to try and hit the tennis ball right in this middle part, right where sort of the juicy part of the strings are. And if you hit the tennis ball right in that part there, we would call this the sweet spot of the tennis racket. Not near the edges, because if you hit the ball near the edge, especially if it's like a metal frame, the racket will actually vibrate, and if you're holding onto it from the handle, often if you don't do it right, you can actually knock the racket right out of your hands. Whereas if you hit the ball right in the middle, and also too, baseball, it's the same sort of logic. I won't draw a baseball bat. I'm a terrible drawer. So we call this the sweet spot. SS. So in a weird sort of way, if you think about this reload zone, in a weird sort of way, it's very similar to that. Especially if you're like day trading, where quite often the midpoint of this reload zone, the sweet spot, which is technically 70.2%, that often works out to be a pretty darn interesting trade level. And notice we've got this horizontal support and resistance line right there. We've got the midpoint of the reload zone, or think the sweet spot. We've got 4.669, which you can't even see, but there it is right there. And we've got 127.2. So I'd say that's a pretty good confluence of levels up in that area. Of course, this is all predicated on the idea actually working, so we don't really have any indications right now. I suppose we got a little bit of a bull div, but it's not really, no, I wouldn't even call this a div. I would call this a coil. So you can kind of see everything is coiling up to some sort of big event here. And this is dangerous. Sharktoshi's over there on the YouTube page. I saw him there earlier. And he's been through lots of this. And he knows that when I post this, these can sometimes get pretty crazy. You can sometimes get a huge swing up coming out of these coils. And then just the biggest, ugliest, violent breakdown on the other side. I suppose you could argue you can kind of see it here. So you get this coiling of momentum. It breaks to the upside, and then once that's done, oh boy, there's just a massive puke out the other side. So be careful with that. I don't really like the look of that. That looks ugly. And considering that we are up against this trend line rules would say we really want to see a W on the other side of this trend line. Yeah, this momentum picture would give me a bit of pause. I do like from an RSI perspective, I sure like this. We are coming in. Seward would call this the Bollinger Bands are compressing. They're going sideways, meaning a building up of energy. That doesn't always have to translate into a bullish move. It could be a bearish move, but it is interesting how we are building up to something. Something big is coming. And unfortunately, we do have that election coming up. And you might find that on the other side of the election, the authorities just shit the bed about privacy coins. So, I don't know whether I'm really, this is it's interesting with this one because like Adam said there, it did come up on the screener. There's kind of a, it was pointing uppy, but then it actually spat out a 4. Now I'm not quite sure why that 4 spat up, but if anything, might be a good idea for us on this weekly commodity trend survey to actually mark on the charts the actual numbers. So you can actually see the logic of why the numbers were painted the way that they were. I don't know if I really believe that for. Something doesn't look right about that. If we go back to that weekly price chart, I guess what I see here is moving averages. The trend still looks to be down. So that trend, in actual fact, look at that. This trend actually rolled over down way over here, July of 2021, a year and a half ago. And it's just been a grinder the whole bloody way down here. So there is no bull trend here yet. If anything, this kind of looks like Matic, but Matic actually has broken out and caused the moving averages to turn up. This has not turned yet. I do, if we want to, Ben, I don't have a problem saying trade location. Yeah, we're okay there. I don't really mind that as a, you're not chasing this market. So maybe what we say is trade location, yes. Unfortunately, momentum, I don't think we have a bull div here. We have this over here that did confirm, but we've kind of waffled out here over here. I don't know. That one's a tough one. I don't know how we'd make a notation of that. Especially if we want to try and keep this to the weekly charts. I mean, I suppose we could drill down to a 5-minute chart. But on a weekly chart, I'm a little concerned that the bull div that was in place here was on this rally. I suppose you could make an argument that we broke again. But then for this div to actually be confirmed, we got to see this momentum back up through here. So I'm going to say that I think momentum is kind of just coiling. That would probably be the way that I would describe this. Because really, I think the coil looks like this. And especially off this like weekly chart, it actually looks like that. So I'm a little bit leery to call this too momentum bullish just yet. It looks something like that. And as I said, sometimes in these situations you can get wild spike in one direction and then a total puke out the other side. So be careful of that. That's what I kind of feel like is could potentially be coming down the pike here. So I would say trade location, yes. Momentum, no. And we don't really have any bullish price structure here yet. For the investors, moving averages are still pointing down, and this is a V bottom. Maybe it's a bullish bot off the lower time frames, but off of these higher time frames, I don't think there's anything here yet. So I don't know, Ben, how do we summarize that for these good people? Does that make any sense at all?
Yeah, so just put location, yeah, Momo div coiling. I think that works. Structure, no. And then there's like a little section. I'll just put additional notes or something, and I'll just put LTF bot, low time frame bot.
Okay, yeah, I like
working.
that. That makes sense. Suppose we should get rid of this silly little tennis racket that I drew here. Do you like my tennis racket? That wasn't bad, eh?
Yeah.
Considering I'm just ad-libbing. And I'm so bummed. TradingView actually took away some of my icons, so I don't even have my Mountain Man icon anymore. I'm so bummed. Jerks. Oh, well. The number one thing that jumped out at me of this, and maybe we see this into the spring, was 4669, midpoint of the reload zone, that doji peak right there, and the 127 alt ABCD. So if we're lucky, this holds in here, and we start working our way up into those price objectives, if we're lucky. I don't know whether I would take that to the bank, but I would say if we're lucky, this little Colin pump chaser zone here is set a base for our rally up top. There's Colin's pump chaser zone. Let's put that in TL, and then we'll put this one in green, and then we'll put that in red. All right. So hopefully that helps. Looks like there's prices there. There we go. All right. Hopefully you can see that. It is a bit messy.
Hey, okay, could I get the link?
Pardon me?
Instead of the image, could I get the link? Yeah,
you like
awesome.
the link, right?
Yeah.
Okay, so there's the link. Hopefully I did that okay. All right, so somebody said that Uniswap is worth taking a look at. Well, let's see what you got there. And what would we do? Would we look at this Uni versus USDT?
Yep.
All right. Oh, wow, look at that. Indeed, you're right. What the hell's that? Oh, court blow. Oh, who cares? I thought Trump had a heart attack or something. Okay, so you're right. That's a pretty interesting looking chart. Clearly, and I don't know whether this is the bottom or not. I don't, if this thing has quite a bit more history, then, probably best to refer to that. I might even say that, our level 1 instructor, he likes to try and encourage the kids to really focus in on this bottoming, especially that candle right there, that tail right there where it broke out and then it came back down and then was rejected. Rejected and turned back up. So that little tail right there, there were still some bears and they're trapped in there and they would love to get out of that trade. So notice, wow, look at that bottom right there. Perfect. This is another one. I think I've told you guys in the past. Really good example where, if you're here to try and learn and you build, like, there's a gentleman who watches these videos. We talk to him sometimes, the great Del Moody. Although I have no idea what his real name is, but we'll call him Mr. Del Moody, I suppose. He literally wrote himself a whole user's manual on how to trade just by picking up our little tips here. I've told you guys this before. It drives me crazy in my career how often I see this. Notice that 78.6 level there. And notice how, look where that damn market is going to spit up. Like, this is probably going to be a big honking W here. And that'll come in right off that 78.6. And then we'll be like up here down the road. And we'll all go, gee whiz, shouldn't we have bought that 78.6? Ay caramba. So I think that's sort of what's going on here. That's higher time frame, bigger picture. We're on the weekly chart. Adam did mention, I think it was Adam, that this is probably worth paying attention to because what's happening there? Oh, hello. So it'll be interesting to see because I think Uni is in our universe. No pun intended. Do we have there? It is Uni. So you can see 52-week high, $28. So the 50% level is 1590, 670 right now. So that's basically almost a triple back up to the 50% rule. So weekly 13 EMA 661, 30 SMA 671, and as I just saw there, this week's price action, if we can hold on to these gains, that's going to confirm that breakout. So wow, that's cool. I think you could make the argument probably, and this actually is a pretty good application of a trend channel kind of concept. So you could draw just simple market structure. It will be validated if we actually go up through those highs. Just to get an idea of what this sort of price channel is. I kind of like that thinking. And what I like to do is just, let's use the midpoint as validation. And notice I drew the line off of there to there, and then I drew it back up against this rally peak. And lo and behold, look how that midpoint lines up nicely with those rally highs. You could also do another one right off of this little bad boy, there to there, and actually you could even drag that all the way back up to there if you wanted to. Maybe even there, that's probably best. And notice, is that midpoint being respected? Sure looks like it. So that tells me that we probably have a nice little upside move up into this dotted line here. If we can get through there, then we're going to take a real shot at those highs. You could also, drill down to like the daily price chart. And this little W here is probably going to give us some upside objectives. So if we do things like Foggenbombs, we can go here to here and up 2.618 is basically a test of those highs. Do you think that's an accident? I don't. So I think that makes sense. And of course, if we can break through there, notice 4.669 is just basically a play against that high, and that low. And quite often what we'll do is level twoers, they should be getting good at this. So we call it tricking out your charts, where you draw horizontal support and resistance lines off of last key battle levels, and look how that's all lining up against that 4669. So that's kind of cool. Yeah, there's a cute little double bottom that came in down there. I suppose you could even argue that this is sort of there to there. What was this, a reload long zone? Kind of looks like it, eh? So RLZ, boom, there you go. So what a surprise. I mean, hell, half the time if you can just force yourself to step in. This has actually got Paul written all over it. Because if I'm not mistaken, he would, and now I have, the only way I can do a mountain man is I have to do a W and then I have to turn it around. There's mountain man. He would, I think, and Paul, maybe you can attest to this, he likes to buy the mountain man level and then place his stop at 78.6. Is that correct?
Yep.
So interesting.
Definitely.
Paul might have, come in on the long side here. Maybe he waits for some sort of bull div or something that forms down here. Let's see. Oh, what a surprise. Look at the bull div there. Look at the RSI bull div. Even Willie went stupid. Oh, look at that. That's an OBV div. Wow, when you see that. If anything, you guys wanting to watch this and take notes, and hey, this is something that'll really improve my trading. Notice that bull div in OBV. And OBV divs are just the shit, folks. I mean, they're just so powerful. So there to there, there to there. This was a sign that this asset is much, much stronger than what price would lead you to believe. So I could see Paul coming in on the long side down here, like a badass motherfucker he is. I suppose you could also argue too, this kind of looks like an inverted head and shoulders here. So there to there to there to there to there. That's a tough one. Like David O is sort of our resident inverted head and shoulders expert, and he's very good at what he does. So I think he would be okay with this, because as long as the market didn't accept below this level, then I think the head and shoulders is still valid. So we dip down, but we snap back away from it. You can see they even tried to bring it back down into that area. It's like, no, get your ass out of there. So if that's the case, then, and the cool thing is you can, inverted head and shoulders give you pretty good upside objectives. So you can go boo to boo, and then it's just basically a cloning of that range. So from there to there and there to there. Really, your target looks like it's up in here. 2.618 up in that area. I'd say the odds are we're probably going to go up and test those highs. Interesting too, this is cool. So here's another little learning piece for you. Dojis often happen at either middle points of a range or at the extreme. So dojis can either represent, like sometimes you can have a situation where price like goes boom, then needs to take a bit of a pause and just sort of collect its thoughts. So we get a nice little sort of consolidation. Maybe the candle looks something along the lines of like that. And it could be green, it could be red, doesn't really matter. Point here is it's very doji-ish or very indecision-ish. And quite often, in fact, actually we might even go like that, the doji itself will actually just be nothing more than a midpoint of a range. And the doji in itself, if you broke it down to like a 5-minute chart or something, you might see 3 higher lows, and then if we start turning up, then it would be a bullish bot setup. So notice this candle right here. This is what jumped out at me, that candle. Notice how that sure looks like a doji. And to me, that's screaming midpoint, right? To me, this looks like this is one leg or one side of the move, right there to there. And then the doji is the midpoint. Come on, you. Right? And should we accept higher, which it sure looks like the market's trying to even as we speak right now. Let's see if we can just get rid of that. And we'll go like that. And we'll go like that. And we'll go, well, that should work. That, yeah, there we go. So, oh, no, not quite. Border. Excuse me. Come on, you. What's going on? Oh, there we go. All right. So hopefully you can see that doji candle. Is that a midpoint of the move? And if that's the case, then, and maybe, I mean, it might even be a midpoint all the way down there, or maybe even right off of the floor. But that doji looks very midpoint doji-ish. And if that's the case, then either the conservative target is there to there and there to there, takes us up top, up into that wick there, or like I said, this could be this whole damn range here. I'll leave that to you, to your discretion, to sort of figure out what levels you want to work with. But that is all suggesting a move up top here. So that kind of jumped out at me, that midpoint doji kind of thinking there. So put that in your pipe and smoke it. Also love, I think I've told you guys this before. What should we think if you ever see the moving averages themselves W? And this actually is extremely powerful. So if we got something like that, and then we'll even hide the price of this asset itself, and wow, look at that. Down, up, down, breakout. That's a W. So whenever I see the moving average itself, and I guess you can almost even argue the moving average itself looks like that inverted head and shoulders, that's a pretty bullish vote. It's going to take a lot of technical damage to break that W. I think we must have had this conversation before, because look at how that W there. Remember we had mentioned that was the original buy level. And then, look at these M's. Like, look at that M there. When that market topped out right there, those M's within M's, oh boy, was that ever a sell signal. And baboosh, doosh, 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 down she goes. So that kind of jumped out at me. I mean, it's not, hugely significant. But it's definitely anecdotal evidence that there's a lot of buying support down in here. So that's kind of cool. And then, I don't think I mentioned it, but maybe I did. Just remember, folks, that the risk markets themselves are actually suggesting that we kind of want to rally into the end of the year. So, considering crypto is a risk asset, and, like I said, considering so many names are so beat up, like there is that uni, right? It's in here. Like I said, there's at any given point in time, we should always keep the sort of 52-week range 50% rule, because that's sort of the return to the mean. And you even heard Paul mention that earlier, right? That we want to be either buying or at extreme bottom ends of the range, or selling at extreme tops end of the range and recovering the position at the mean, or the 50% rule. So this is clearly showing you that there is a lot of upside on this uni. And again, it's another 5 sort of saying, it's ready to go. And I did, just sort of a sales pitch for us to follow along this thinking, and maybe follow along my Twitter feed. I put a notice out the other day, do you think Doge is a one-off? But I don't. I think Doge, just along with all of these other coins, everything is ready to go. It's just somebody just needs to give a reason for these things to pop. And it might just be as simple as an image like that. No, get him out of there, jerk, loser, boo, hiss. No, it might be as simple as a reason like that. Just give me some reason for your name to rally, some sort of fundamental kick in the butt, and away it'll go. So, we just got Litecoin. I don't know. Somebody call up the people at XMR and say, what the hell are you guys doing? Are you guys doing anything? Is there some sort of fundamental reason for me to get involved? Because it kind of looks like it's trying to turn. And of course, if we do get up through this level up here, well, you know, that's going to be a big ass W. And you know how much that Beamish guy likes his W's. So, kind of cool an anecdote. All right, so if we use our simple approach to the market and our analysis, I think we say that, yes, we are at trade location. Green boxes. I would not be surprised if a year or two from now you look back and you find that this goddamn market bottomed right off that 78.6 like they so often do. There's probably a cute little trade in here, like I said, off of that. This has got Paul written all over it here. Would he still be in the trade? I'll leave that for him to answer. Paul, would you still be in this trade?
Depending on the time frame, yeah.
Okay.
If it's a higher time frame trade, yeah, I'll still be in the trade. If it's a lower one, I'm long gone, took the profit, and next boss.
All right, that's a fair answer. I think that according to you know, just simple head and shoulders kind of market theses, you know, think of this as just like a big fractal. And you know, if you're trying to wrap your head around why do markets pivot around head and shoulders kind of concept, you can kind of see another one here. You know, the easiest way for you to think about this is just think about this like it's a maple leaf. This is just the way nature works. So notice heads and shoulders are nothing more than just the points of the maple leaf. And then this is the hard part to connect. Notice that we have a head and shoulders here, a head and shoulders here, a head and shoulders here. And then the whole thing put together is a shoulder, head, shoulder. So just try and think of price very much the way Mother Nature works. And really, you know, here's probably even like the better example, because technically these fractals should be 5 bars. But the point being that you have to understand that the market is fractal. The universe is fractal in nature. This is the way change occurs. This is the way Mother Nature would like change to occur if everything was orderly and balanced. So if anything, maybe with that kind of like thinking in the back of your mind, maybe you can start to see fractals all over the place and fractals within fractals within fractals. And that's okay. That's exactly the way the universe works. So to see this turn back up here and start rallying would not be shocking. And of course, like we said earlier, we are at acceptable trade location. Did we get half decent momentum signals here? I don't know. If I just look at the daily chart, just first blush, you know, I'll tell you, the one thing I do like seeing here, this OBV sure looks powerful. That's huge. Because that's even, it's not a div, is it? It's just a big ass fucking W there. But that is huge. That's really significant. So money is flowing back into this asset. So I don't think I'm going to say divergence, but I am going to say that I think that we would say indicators are confirming a turn here. You know, you can kind of see it here. Down in RSI, up, down, basically right back against the lows. Then you can see more W's coming in here, and now this thing's trying to push up here. So what you might find is even off of like higher time frames. Yeah, look at that. Look at all these W's all coming in here. So the way that I would, maybe you could write this up here, Ben, for our sheet is trade location, yes. Indicator confirmation, the indicators are pointing up. There's nothing really bearish here out of the indicators. It's not divergence. And then I would say we're just a little bit early. Well, you know, I'd even say that's half decent price structure off of there too, you know. It's not a bad name, you know. Who is it that asked us to look at this? It's that you're definitely heading in the right direction, no doubt about it. I don't know, Ben. What do you think? How do we write this up?
All right, so I've got location, yes. Momo div confirming, as in, yeah, indicator confirmation confirming. And then structure. What did we want to do for structure again?
I don't whatever our choices of answer. Maybe that's what
Right. So I guess for we got to figure out, do we want to make this like talking about weeklies or dailies? So obviously there's
I mean, that's a W any way you shake
that's a
it.
W right there.
And this will be like, if this comes in, this will be like a monthly W.
Right.
So I really don't mind it. I think I'm just gonna say market structure. I think you just say yes.
Yeah. Cool.
And on a relative basis, I mean, this is the kick in the pants. Is this a risk worth taking here? If I come in here and I just buy that and I say, you know what, I'm gonna risk to a break of these lows, and this story just didn't work. But I'm going to force myself to stay in this thing until I see a 50% retracement. Not looking for new highs. Just looking for a simple 50% retracement of the previous range. What kind of money am I going to make? That's a 4-to-1 risk reward taking that W right there. Is that in our best interest to take that trade? I think it is. If you risk $1 looking to make $4, that to me seems logical. Yeah, there's Foggy Boggies. Foggy Buggies probably line up with 38.2 pretty nicely. This might be another one of Colin's ideas. So that Colin guy, man, he's getting around these days, eh? Especially since he's married, too. All right, yeah, so you got Foggy Buggies, 38.2s. Look at those key highs right in there. I wouldn't even be surprised if there's some price gaps. So. Okay, so I think that's probably my 2 cents on that bad boy. I'll throw that into the room, and we talked it out. Paul, is there anything that you would add to that conversation? Something I'm missing, maybe?
No, I see W and another smaller W, so I like that. I like that chart.
All right,
I see a smaller W and that big W, so.
Okay, I like that. Here, I got rid of those extra lines, so maybe that one's better. Okay, holy Jesus, look at the time. What the hell? How did that happen? I don't think we need to be here all night, guys, so we should probably wind this up. We never even did look at our grand predictions. So, I know that there were a couple more requests, but it's already 8:30. I can't believe how late we were, so... I think we'll probably leave it at that. Why don't we pop on over, take a look at our spreadsheet and our predictions and see how we did, and then maybe make grand predictions for next week, and then maybe we'll send you on your way. So, all right, first and foremost, who was the smart guy? Holy shit, Beamish was right this week. It's a miracle. Goddamn son of a bitch. Yay! Whatever the hell that means. Paul did temper his enthusiasm, so we got to give him that.
Yeah.
And Ben, actually, all of us sort of calmed down a little bit, eh? We all kind of, well, actually, no, Ben actually went a little bit more bullish. So you were actually looking for us to really puke out here. So we didn't totally, actually, I guess you were looking for neutral, eh? Last week you were looking for puke out.
Yeah, the week before.
All right. So congratulations to the Beamish. Looks like he was on this past week. Way to go, Beamish. Where do you think we're going this week, Ben? What do you think we're going to do?
I'm going to say a 0 again.
Neutral?
Neutral.
All right. this trading range is driving us all crazy here, eh? The only one who's actually enjoying this is Paul, because he's long sells, long, blah, 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 buy, sell, buy. But that just looks like a big hurry up and do nothing, eh? Yeah, let's put that on there. All right, so that's 2 day. Do we actually get a weekly cross here? No, we're nowhere near. Okay. Okay, so Ben is gonna go with a neutral. Big hurry up and just cool your jets. All right, Ben. Excuse me, Paul. Are you as bullish as always, or are you tempering your bullishness?
No, +2 or +3. I don't know. I'm quite bullish.
+3. Wow. I haven't seen that before. What color should have +3 before? I don't think we can go there. We'll go with a 2.
Yeah.
That's about as bullish can get. And great that you're so enthusiastic. Great to hear. And the Beamish. What the hell is the Beamish going to say here? Beamish is going to... Our next meeting is after the election, eh? So this should be actually an interesting conversation. What does this world look like going forward? In a weird sort of way, if this was like a week following the election, I would say it's uber bullish. But I just don't know if we're ready to go here just yet. Interesting. That's where the trade metric is. There's our next get together, and here we are here. I guess what I was doing recently, which seemed to be working fairly well, is I like to sort of get a feel for sort of the sine wave of the market. Which one is that? Is that one? Nope. That one. There we go. So, something like high to a low. Maybe even there. That's not bad. So yeah, it wants to be a bit further out. Yeah, maybe something like that. That's not terrible. All right, well, we'll just go with this. All right, so, that's not good. I mean, I know Paul was suggesting that we are in a trading range here. Looks like we've bounced off the bottom end of his range here, but because this all looks so nasty and we're not meeting until here, I think I have to go with another minus negative reading. I don't know whether I would really be like -2, but I'll just stay conservative and go -1. So another orange. Orange. Okay, so we've done our grand predictions. Closing thoughts for these good people? Who wants to go first? Paul, feel like going first?
Yeah, why not? Don't trade our opinions or your opinions. Just trade your setups. And you see me, I'm bullish on this prediction, but I could put, if I see the top of the range, I could put a short, and I will trade my setups, not my opinions. If I will see a bearish setup, I'll play that one. So manage your risk, play your setups.
Be interesting to see what your weighting on your weekly newsletter is of longs versus shorts. How many times did you go long in that list of trades, and how many times did you short? Because reading this, all you're doing is you're just hunting longs all the time. But I think you're going long and short, aren't you?
Yeah, long and short, doesn't matter.
So it might be interesting to see what that breakdown looks like, or just for conversation.
Yeah, I guess 50 or 60 long and 40 short, but I'll definitely take a short if I get the setup.
Yeah. All right. There you go. Something about how does it go? Something about kings and markets.
No, treat the market like a business, and market will treat you like a king.
There you go, people. Take that shit to the bank. Hit that like button, subscribe, ring Colleen's bell, wherever she is in the world. Maybe Ben's bell too. I don't know. All right. Closing thoughts from the Ben Meister. Ben's not really looking for a hell of a lot out of the market, but maybe he's got some words of wisdom for us.
Yeah, no, nothing in particular.
Okay.
Yeah. No, yeah, I mean, just echoing what Paul said, it doesn't get better than that. Yeah, don't trade your opinion, trade your rules, otherwise you'll be ruled by your emotions and your past experiences, which will probably lead you down a destructive path.
Yeah.
Yeah, so send some PMA to Brian and the boy tomorrow as well.
Thank you, sir.
And,
appreciate that. Liam appreciates it.
Absolutely.
Tell you, man, he's doing pretty good at McDonald's these days. Jeez, he's getting out like a bandit. But he loves his McD's, so as long as he's happy, I'm happy. I think I showed you that picture, though, man. I think I got to go on a diet. No more McDonald's for Brian. Brian's a little portly. Oh, well. All right, good people. I hope you enjoyed the offering. As always, half of the reason why we do this broadcast is I would ideally like to have these videos running 24/7 in like a place like Decentraland where you can just sit and watch them at your leisure. Big thanks and shout out to the team for supporting me through this. Ben, you've been here since day one, you rock star. Paul, of course, a recent addition. Chris, who do we have? We had Nick and Derek. I hope you guys are doing well. And, of course, you're always welcome back to pop in and say hello if you feel like it. If you so as I said, if you would like to help us get that boost set up and running, we do have a cute little Ethereum donation wallet address. If you feel like you got some value out of this show and you want to help us, cool, I'd love you for that. As well too, I would like sort of in Decentraland, or I suppose you got to be careful about the metaverse, right? Everybody, if you want to know what the metaverse is deteriorating into, and of course I keep playing this on all the videos and everybody laughs, although it's probably getting a little redundant. But if it's one thing you probably should do is just don't let your mom loose in the metaverse, because it almost always ends ugly. And of course, somebody found their mom in the metaverse.
Mi mamá, ¿qué será lo que tanto está?
Oh, ma.
Uy, ma, no,
Ma,
uy,
what are
cucha.
you
Oye,
doing? So,
oye, ma.
we would.
Uy,
Busted.
Gus.
Anyway, getting big jokes out of that. So, if you want to maybe give Ma a little bit of clean material that she can come and check out on the metaverse, maybe consider helping us. In our quest to make this world a better place. As well too, you are obviously somehow drawn to TRI's YouTube website. We have a ton of free information on here, so if you really do want to teach yourself, no cost, no obligation whatsoever. You can see on a weekly basis we have a show that I do on Sundays that talks to students, and it's a lot of Q&A, and you can see we have a pretty regular following there. As well, here is, like we said, 66th episode. Pretty good following here as well, these episodes on crypto. There are a couple free sort of learning module tutorials. I used to work with the Coinigy guys. In fact, actually, I should probably reach out to them, maybe do something again with them. I mean, they've got pretty good hits, 121,000 views. So maybe we should hook back up with them. Also, too, I think it's important for people that are coming to investing and trading to really get a real frank look at this world. Like, what is it you're actually getting yourself involved in? There are some very good sort of free educational pieces that will give you a very candid look at how this world works and how capitalism works. So I would highly recommend you watch the Money Masters videos, and he also has a couple other videos, Wizard of Oz, which ironically enough is all about the U.S. banking system. Also, Ray Dalio's How the Economy Works, but it's fascinating how I think Ray got China wrong there. But nonetheless, I think on balance, Ray has a pretty good sort of idea of how economies work. Would probably be a good idea is to have like a fourth turning video in here to sort of put the demographics into context here for you. One gentleman that I actually really do like, I've been listening to him quite a bit recently, is this gentleman. Always completely butcher his name, but Peter Zahn, I think that's his name. I think he's got a pretty good take on the global economy. He has a very, very different view from Mr. Dalio on China. I might include him in the little recommended videos here for you. And then, of course, if you are interested in crypto, this is the gentleman who's actually running the SEC right now. And I suppose that screenshot of him is a pretty good sort of analogy of what this guy's attitude is like. He's not your friend if you are involved in crypto. Let's put it that way. He very smart. He understands blockchain backwards. He used to lecture on it. This MIT course is on blockchain. He is Mr. SEC, and of course he's sort of the chief regulator of crypto right now. So they always say if you want to really understand the battlefield, what you really want to do is you really want to understand your enemy. So get to know your enemy. What motivates them? Why do they act the way that they do? So that's why I encourage people to take some time and actually take his Introduction to Blockchain and Money course that he taught online through MIT. I think it would be an excellent education for everybody who wants to understand. And then our head marketing guy, good old Josh, I think he's doing a fantastic job with sort of getting the message out. And to that end, there's Brian, and Brian, does these kind of tweets, which probably aren't very politically correct, but they kind of make me laugh.
Uy,
Ma, you slut. So what I would suggest you do, if you really want sort of a real taste for what TRI is and this whole sort of PMA for the win and what we're trying to do with sort of making a positive difference in the world, I would follow this TRI PMA on Twitter. And Josh is actually the guy who writes this blog for us. And I think he does an absolute fantastic job. So proud of him. And he's actually helped a lot with sort of focusing TRI's message. So a big shout out for Josh. And I don't really mind having him and his channel down here. I think the world of him. I think he's a fantastic gentleman. So be sure to check out this. This is all free, and you can spend a ton of time in here. I mean, you could literally watch these videos for the next month and just constantly 24/7, and it's all free. If you get to the point where you're kind of like, okay, I listen to these guys. I think they got a half decent head on their shoulders. I think we've built some excellent proprietary tools to help you sort of see the market and understand. This is my 1980s website brought into the 21st century thanks to TRI CTO, and he's helped me build out a lot of the tools and stuff that I used to use as a commodities broker. I talked to you a little bit earlier about how to use the histogram kind of information. And on the site we have all of our daily brief. We do videos on the site that are 2 hours long every day. So if you want just a daily update of exactly what we're doing and seeing, you can come on the site. And these videos you don't find on YouTube. But in essence, this library here of daily briefs, this is, oh God, I don't know how many pages this is. This is, what does that say, 133 pages with basically videos every single day. You see how many? There's about 10, 15 videos on this page alone. So all of the various different video offerings are on the site, as well as the dashboard. Hell, you can even watch some of our veteran traders and their trading journeys and their journals and their trade logging. I think the tools that we built on the site, and I would like all students to use this to get better at sort of watching your own emotions and how you're doing. And, the interesting thing is, as I think I alluded to earlier, I came back from Portugal, And since then, I think I'm still in party mode because my trading's kind of, so if anything, great way for me to sort of get control of my trading. As well too, along with sort of internal messages of sort of overbought, oversold, and sort of is the tide rising, is the tide falling. We actually have a whole bunch of really cool screeners that we basically are screening the market constantly for, whether they be U.S. stocks, Canadian stocks, European stocks, Australian stocks. And we also have quite a robust screener set up for the crypto universe as well. You can see how big this is. It takes forever to load. There's Euro, and here comes crypto. So lots and lots of crypto screeners if you're looking for ideas to consider in the market. So put it all together. I think the site is a fantastic value. And keep in mind, we have like a 30-day trial, so you can pop on the site and you can kick the tires and say, okay, let's see what the hell these guys are worth. Let's come in and hang out in the daily briefs with us and get to know the community. Come in, hang out. Like I said, we have a lot of fun in our chat rooms exchanging pictures of Mr. Musk. Anyway, that's just one conversation. And then if you actually get to the point where you're like, okay, I could use a little bit of help. That's where our school program comes in. And I have yet to see anybody online actually teach the process the way that we teach it. I hear a lot of people squiggly line this, squiggly line that, but I don't see too many people ever actually talk about the process. And I think that makes us extremely unique. In that, not only do we talk to you about things like you have to get control of your emotions. How do you get control of your emotions? You very rarely hear about people, online they'll go, oh yeah, look I got this awesome indicator and it's got this awesome win rate. But how do you handle the anxieties of running a business on a daily basis where you are basically paid to be uncomfortable? Nobody ever talks about that kind of stuff, but that's the real value of our course material. I think it's an excellent program. It's spaced over basically about a 40-week period from beginning to end. And I think it's incredibly robust, and I haven't seen anything like this else online anywhere. So if you are a self-starter, that's cool. Great Del Moody's of the world. I have no problem with that whatsoever. And, knock yourself out. Mine are free YouTube page and just go for it. If you like working with a community of people, by all means, if you are up to speed and you're ready to go, give us the 30-day trial, come and hang out in our community. And if you like what you see, maybe you'll join us. And if you need help on setting yourself up, how the hell am I going to do this? The great part about TRI is we've tried to sort of lay everything out in as easy a format as possible. Like you see, this is the way classes are basically taught off of these slideshows. But, even our library, very thorough. In fact, hell, you can come on TRI and our library. I've had some people say that just even the library itself is worth a subscription because there's just so much information here. With all that said, I think TRI is a pretty good proposition. And if you need help, one thing that I saw, which is really, and I'm going to post this on the YouTube page. So, maybe I'll put it in the description just so anybody watching this video afterward can see. I was in Portugal recently, and one lady who was kind of iffy about us. And she was kind of like, I don't know, you guys, you're all kids. You're kind of computer nerds. I don't know whether I really want to hang out with you guys. But I got her to read this introductory letter. And after she read the letter, she really understood what our motivations are. So I'm going to ask all of you that if you are interested, there's a live stream over there. I couldn't figure out where the hell it was. Please, where the hell is the damn page? Well, anyway, how am I going to do this? Where are you guys? I thought you were over here. Actually, maybe I can just click on this. Hey, there we go. I'm going to put this in here, but I'm also going to put it in the comments. If you really want to get to know us and TRI, I would strongly suggest you read that document. Then once you've done that, if you feel like coming and sort of kicking the tires a little bit, we'd love to have you. And we have plenty of different resources to help you regardless of what level you are as a trader or investor. So on that note, I think I'm going to call it a night. PMA for the win. Thank you very much, Ben, for your awesome participation. As always, filling out his super cool spreadsheet sort of app. So is the app dependent on the spreadsheet, or is this run separate of the spreadsheet? Not quite sure how that works.
So it just is like it just mirrors what's on the spreadsheet.
All right. So thank you so much, Ben. Awesome.
Sure.
Paul, of course, has got, and Paul, like a soldier, every time I post these things, he's always right there out of the get-go, replying and retweeting and all that kind of fun stuff. Where the hell is he? Oh, I thought he was in here. Maybe I had notifications. There he is. Crypto Traders Arena. So please, if you're interested, go over and introduce yourself to Paul. If you treat him really nicely, maybe he'll let you into his community. That's entirely up to him. But real pleasure working with Paul, and I think he's a fantastic trader. So thank you very much for participating on the show, Paul, if you're still with us. Godspeed. And I think I'll leave it at that. So have yourselves a great evening, afternoon, wherever you are in the world. PMA for the win. Don't get caught by this guy. And if you need to learn who the hell this guy is and why this crypto space is just riddled with these clowns, maybe come and hang out at TRI a little bit, and we'll sort of set you on the straight and narrow. Feel free to follow me if you like, and of course our TRI PMA. Bookmark, hit the like button, subscribe, all that kind of fun stuff for the YouTube algorithm. PMA for the win. And I think the only thing left for us to say tonight is bye for now.